Hello everyone, I'm Dr. Swati welcoming you to Global Online Platform, and here we are back with our NTA UGC NET June 2024 preparation for the paper 2 commerce. And here we are come back with our target of 1000 MCQ series. In today's session we are continuing our 200 MCQs in this particular lecture. And here we will get here you will complete our super fast revision of entire syllabus. Okay. And let's start. Before we start, I will announce you that our new batches will be started from every Monday. There is having a new batch of the commerce and management subject. If you want to join us, so you will get 20% off on this fees, and in the 8,000 fees you will get if you register yourself for the paper 2, you will get paper 1 is free of cost. And here you will get complete course on commerce and management, daily live lectures. If you miss any lectures, so recorded lectures is also available in the app, and the complete syllabus note, full syllabus mock test, more than 4,000 MCQ series, PYQs with a detailed explanation. Okay, so the contact number is given in your screen, so get in touch with this contact number. And there is another announcement, that is our new batches started from the every Monday, but here you will prepare for your next examination, for the December examination. So, 6 month duration is very good for your preparation. So let's start from the today. Okay. So before we start, I will tell you about the how to download the Global Online. So go to Google Play Store, search the Global Online and open it, and just install it. And after that, register with your number. After registration, you can go to My Course section, and in My Course section you have to search whatever the course you want, and register yourself. After you register yourself, you will get all the notes, all the video lectures, all the recorded lectures, all the notifications in the app. Okay. And the unit wise syllabus, unit wise content is given, unit wise all the materials is given in your app. So I hope you are joining this very soon, and you preparing yourself for the next examination, and which will help you if you started from today. So the 6 month duration is very good for your best for your examination preparation, and easily you can crack your examination. I'm definitely tell you 6 month is very good duration. Okay, so let's start with our next new question. Okay, what are the operative function of human resource management? What are the operative functions of human resource management? The first one, organizing. Second one, directing. And C, controlling. A is organizing, B is directing, C is controlling, and D is none of the above. So what will the right answer? The operative function of HRM. Operative function of HRM is, in the operative function, there is an procurement. Okay. And there is an development. Then competition, compensation, then integration, and the maintenance. Okay, maintenance. So what are the operating function of the HRM? So these are the operating function of the HRM. So in the what is the in the what in the operating function, they operate how they operate the human resource, while they are how they are uh, procurement, using the procurement, how they developed it. Okay, so the procurement, there is a job analysis, human resource planning, recruitment, selection, placement, induction, transfer, promotion, and the and the separation. And what is in the development? So development, you can see there is an personal performance appraisal, training, executive development. So here the career and planning and development. So here they are thinking about the overall development of the company. Okay, so compensation include a job evaluation. Okay, the due to how the job evaluation is a compensation is also an operating function. Wages and salary, they give the compensation as a wages and salary administration, bonus and an incentives and the payroll. So this is an a compensation, this comes under the section of the compensation. Okay, so what is the integration? In the integration there is an operating function, is that motivation, they give the motivation to their employee, job satisfaction, okay, grievances, and the collective bargaining, conflict management, participation of employee, and the discipline. And in the maintenance, what they do, the focus on the health, safety, social security, the welfare scheme, personal record, and the personal research, and the personal audit. Okay, so these are the function of the operating function. Now tell me, the organizing, directing, and controlling, it comes under the operating function? No, ma'am, this is not a operating function. This is the it is the managerial function. It is the managerial, what I'm writing, managerial function. Okay, so in the managerial function, to the organizing, directing, controlling, this is a function of, okay, this is a function of. And one more thing, that is a planning. So planning, organizing, directing, this is a function of managerial function. It's a function of manager. And in case of operating function, there is an on the basis of procurement, on the basis of development, on the basis of compensation, on the basis of integration, on the basis of maintenance. Clear? So the answer for this right question is none of the above. Clear? Now the next question, that is, which one is not a performance appraisal method? So you know that in the performance appraisal method, the option number A, that is 360-degree appraisal, option number B, balance score method, option number C, ranking method, option number D, interview method, which is not a performance appraisal. So how do the company performs use the performance appraisal method? Okay, so there is a two method, which is they divided this method in a two concept, that is a traditionally, okay, and one other one, that is a modern. Okay, that is the modern. So in the traditional, there is a graphic rating scale method. Okay, what is graphic rating scale method? And alternate ranking method, and then the paired comparison method. Okay, and after that, um critical incident method, and fifth one, that is annual uh, uh, confidential, okay, annual confidential reports, and the sixth one, that is a narrative form. Okay, so these are the traditional method to calculate the performance of an employee. Okay, and after that, in the modern concept, there is a bar. What is the bar is, that is behavioral anchored rating scale. And the second one, that is mbo is management by objective. And the third one, it is by the assessment center. Okay, and the fourth one, that is a cost accounting method. And the fifth one is, that is the 360-degree appraisal. Okay, so here it's not a performance appraisal method. So the question is asking from this all area, okay, not on the specific basis. So you know that the 360 appraisal is comes under the modern. You here, the balance score method is also, this is the kind of appraisal. And the rank method is also kinds of method. And the interview method is not a performance appraisal. We are here, we are selecting the employee for the job, not for appraising them. Okay, So that's why option number D. Job analysis provide the information for writing. First one, organization chart. B, policy. C, job description. And D, pro procedure. Okay. So what is the job analysis? You know, job analysis provide information of two way. That is a job description and another one job specification. So in the job description there is a job title, job location, the things which describe your job. Okay, so job, the title of your job, the location of your job, summary of job, and the reporting to the working conditions. What are the in which working condition you are working, the job duty you have to perform, okay, machine to be used, and the hazard. So this is the description is given, that is a job analysis, or it's a type of a description job analysis. Okay, so another job analysis, that is the specification. So specification for the specific job description is the what is the qualification required, okay, what is the how much experience they require, they are trained or not, training skill they have or not, okay, responsibilities, emotion, characters, and the sensor demand. So the job analysis provide information in the for the writing the what will be the right, that is the job description. Okay, so job analysis is related to your job description and job specification. Clear? Next question, that is 104. Performance appraisal means evaluating and employee performance related to. So performance appraisal means evaluating what employees performance. First one, establish goods. Second one, fellow employee. The third, the C, expectation from work, and the D, performance standing. So here the performance appraisal means evaluating an employee's performance which is related to their performance standard, how they perform, what are the standards the standard in which they perform. So it is a regular review of the employee job performance and overall contribution to employee, is known as a annual review and the performance review evaluating an employee appraisal. Okay, a performance appraisal evaluate and the employee skill and achieve and the growth and okay, so this is a performance appraisal. Option number D is correct over here. Next, workers participation in management in any organization is voluntary, institutional, democratic, and all of the above. So the worker participation is all of the above. Okay, so what is worker participation management? That is WPM, worker participation management. It refers to the participation of non-managerial. So who will perform over here? The employees. Okay, and employees making a decision of processes of the organization. Here the workers perform his worker participation is also known as the labor participation. Okay, so the option number D, they are a volunteer, institutional, and democratic. The next one, employee moral is related to productivity, attitude, empathy, and skill. Employee moral is related to their productivity. Okay, so employee moral is related to their productivity. How? The several studies indicate that moral can be directly tied with their productivity. Okay, and the result is also shown in employees engagement directly impact on his productivity. Clear? Next question, what is the method used to determine the wages differentiation? So what is the method used to determine the wages differentiation, differential? Okay, so merit ranking, job design, job evaluation, and the None of the above. What is the method of determining the wage differentiation? So wage differentiation is on the basis of their merit ranking. Okay, merit rating. So merit rating is also known as a performance appraisal, or you can say it is a assessment of an employee. So in this, the work of the employee are tested by the manager. Okay, and this test is the performance of the employee in the group activity. Okay, the group activity, and with their co-workers. And here the quality, deficiency, requirement are assessed. What the quality they have, what the deficiency they have, what they require to develop himself. So these are the assessed in this kind of rating. Okay, and you know that the wages and the salary, okay, wages and the salary of the employee is determined on the basis of the merit ranking. Okay, on the merit ranking. Now the next, the selection means elimination, testing, recruiting. So you know that this is what selection means. Selection means your elimination. And why does the elimination? Selection is a process of choosing the most suitable candidate for the vacant position in the organization. And in the other word, you can say the selection means weeding out the unsuitable applicant. Yes, what they do, either this they weeding down the or eliminate the applicant or the unsuitable applicant. Okay, and they select those individuals who requisite the qualification and capability to fill the job in the organization. So selection means eliminating, not recruiting. The selection, the recruiting is a process. After the selection there is a process is recruiting, then testing. Then social security benefit include annual bonus, non-financial incentive, old age pension, and none of the above. So you know that social security benefit is that the pension. Okay, so pension is given by the governments. Now the pension scheme is not valid in the not facilitated by the government. Okay, so Indian social security system is composed of numbers of the schemes and the programs spread throughout the varieties of the law and regulation. So keep in mind that one thing is that government control the social security system in India to apply to only to the small portion of the population. Clear? So the old age pension, the social security benefit is to the old age pension. Okay, so the India social security scheme was cover the types of like a pension. Okay, pension, then the health insurance and the medical benefit. Okay, then the disability benefit and a maternity benefit. Okay, and the gratuity. So these are the social security scheme provided by the governments. Pension and the health and insurance, medical benefit, then the disability benefit. They have providing the quota, okay, according to the disability, and the maternity benefit to the pregnant woman. Okay, so the child care leave like this, the gratuity, the lump sum amount which is uh, uh, which is given by the government to the employees. Okay, so this is that is a gratuity. So the option number C is over right over here. Next question, in uh which of the following is related to the performance appraisal? Task method, prize method, MBO, management by objective, and the link method. So you know that we just discussed in the previous question, that is MBO. So MBO is a strategic management model that improve the performance of your organization by clearly define the objective, that are agreed by the both management and the employee. Okay, so this is managed. They are doing whatever they are doing with an objective, management by the objective. So here what did they do? The manager clearly defined the objective behind their appraisal. Okay, and according to that they do the employee do perform. Okay, so the next one, that is ASEAN was formed. ASEN was formed in the year, in the which year? Option number A, 1967, 1982, 1993 and 1994. So you know that ASEAN was established in the 8th of August 1967 in the where in the Bangkok. Okay, by whom? By the 5 original member. And who is the 5 original member of the ASEAN? The 5 members are: first one, that is Indonesia. Second one, Malaysia. Okay, Malaysia, Indonesia, Malaysia. Okay, third one, Philippines. Okay, fourth one, Singapore. And the fifth one, that is the Thailand. And the sixth one, that is the Brunei. And the, yes. So there is a 7 in the, there is a 5. This is a 5. Only 5. This is the Indonesia, Malaysia, Philippines, Singapore, and okay, Singapore and the Thailand. These are the Thailand. Okay, Thailand. And fifth one. Okay, so this is the fifth one. They are the Indonesia, Malaysia, Philippines, Singapore, and Thailand, and the Brunei. And yes, and after that, in this is initially they are the countries which is in the ASEAN, but after in the 18th of the January 1984, the Vietnam. Okay, Vietnam is also the part of the ASEAN in the year of 1995, and Myanmar, Laos, and Myanmar is joined the ASEAN in the 23rd of July in 1997, and after that Colombia, uh, Cambodia. Okay, so it is on the 3rd of April 1999. Clear? So you know the option number A is right over here. Next question, in which year WTA comes in exist? So you know that this is a really simple question. The WTS comes in exit in 1995. Clear? And it replaced to the GATT, and the section the GATT Act is in 1948. Okay, it's replaced to the GATT, and WTO is established in 1995 with the same objective. Yeah. The next question, which of the following is not a trading block? It's not a trading block. You know that NAFTA is trading block, ASEAN is trading block, or the SAARC is trading block, and the IMF. So what will be the right answer? What is IMF? IMF is the International Monetary Fund, and it is an organization of 190 countries. Okay, it is an organization of 190 countries working to foster the global marketing operation and secure financial stability, and the facilitating the international trade and promote the high employment and sustainable economic growth and reduce the poverty around the world. Okay, so which of the following is not a trading bloc? So MIF, IMF is not a trading bloc. NAFTA, SN, and the SARC is a trading bloc. Clear? Dash among the following is a financial derivative which involves the least risk for the holder. So option number one, the forward. Option number B, option, future, and swap. So here is least risk holding. Risk holding. So the option are financial derives is the give the buyer the right but not the obligation. So here option number B, that is option. Option is having the less risk. Okay, trading, and there are the two options, that is the call option and there is an put option, and the basis of wide range of the option strategy designed for like a hedging and speculation and speculation. Okay, speculation. Next question, which of the following is used for international money transfer? You know that the RTG, NEFT, SWIFT is and the none of the above. So you know that for the use for the international money transfer, so you know that the SWIFT is used for the international money transfer. What is the full form of the SWIFT? SWIFT is the social society for W for worldwide interbank financial telecommunication. Financial telecommunication wire transfer. So this is an offline facility available with the most bank in India, like Axis Bank, like ICICI Bank. Okay, okay. So here, next question, that is VSAT technology is first followed online trading. Okay, first follows for online trading. So BSE, OTCE, NSE, and ISE. So here, what is the full form of VSAT? Is form of very small aperture terminal. Aperture terminal. So this is a small size earth station used in the transmit or receive the data, voice, video signal over the satellite communication network. Okay, and is excluding the broad television. The trans receiver receive the signal to the satellite transponder in the sky. So this is used by the NSE, National Stock Exchange. Is by the National Stock Exchange. Clear? One of the following is not related to the WTO. TRIPS, Ministerial Conference, TRIMS, and the TRAI. So option number D is correct over here. That is a TRAI. Okay. So you tell me, you comment me in the comment box, what is the full form of TRIMS, what is the full form of TRIPS, and what is the full form of TRAI. Okay. Next question. The companies globalize their operation through the different means. Option number one, exporting directly. C, licensing, joint venture, and all of the above. So what will be the right answer? The company globalize their operation to the different means, the globalize. Okay. So the globalization market having the manufacturing at home, manufacturing at abroad, and the manufacturing at home, at abroad, in at investment entry. Okay. So the option number D, that is exporting directly, licensing, and joint venture. So these all of the above is correct. That is company globalization, their operation through their exporting directly, to the licensing, or to the joint venture. Clear? Next question, which of the following is not a function of foreign exchange marketing? Stabilizing function, hedging function, credit function, and transfer function. So here it's not a function of a foreign exchange marketing. Hedging is a function of the foreign exchange marketing. Credit function is also, and transfer function is also. So in the function of the transfer, for the foreign exchange marketing, the stabilization function is not in the foreign exchange market. Clear? So the what is the hedging function? So I will tell you what is the hedging function. The hedging function is a function of the third party. Okay, the third sorry, it's a function of the foreign exchange market, is to hedge the foreign exchange risks. And how they hedge? The party in the foreign exchange are often afraid of the fluctuation in market rate, so that market, so that which means the price of one currency in the terms of another currency. Okay, and this might result in gain or losses by the concern. So that's why they hedge the market. There's a hedging. They want to take a precautionary steps to prevent such hedging. Okay, so what is credit function? Credit function is a forex foreign exchange provide that short term credit. Okay, short term credit. Okay, to the importers in the order to facilitate the smooth flow of goods and services from the various country. Clear? The next one, that is a transfer functioning. Transfer functioning is the basic and most obvious function of the foreign exchange market, because the transfer the fund or the foreign currency from the one country to the another for the settling their payment. So this is the transfer functioning. Okay, so there are only three functions, that is transfer function, credit function, and the hedging function in the foreign exchange market. Clear? Next question, that is ADR, GDR are an excellent means of investment to invest in India. So ADR, GDR. So what is the full form of ADR? ADR, that means American Depository Receipt, and the GDR is a Global Depository Receipt. So actually the what is about the this NRIS. So this is a and foreign national. Okay, foreign national. These two terms of investment, these two terms of the nationalized can invest in the ADR and the GDR. So the both are invest in the ADR and GDR, and these are not open for a resident India. Okay, who is resident India is not open for them. They can simply trade on the Indian stock exchange. Okay, it's not open for the resident of India. So you know the global, what is the GDR? The GDR is the receipt of a one type of depository receipt, like its name. It can be offer other several foreign countries globally. Okay, so the DS, the depository receipt only offer and a single foreign market, and will typically be titled that market name. Okay, then what is about The ADR is an American depository receipt. Here the foreign company to depository bank intermediary. So US from the foreign. So ADR only available in the United States. Okay. And the GDR is available globally. Okay. Globally. Clear? So the excellent means of investment is in India, that is NIRS and the foreign national. Clear? Next question, which country is not a member of the NAFTA? United States, Canada, Mexico and China. NAFTA, full form is a NAFTA, that is the North American Free Trade Agreement. Okay, and it is a treaty between Canada, Mexico and US, and that eliminate the most tariff between the countries. Okay, and was replaced by the United States Mexico Canada agreement. Now it is a new name of the NAFTA is, that is the United States Mexico Canada what agreement. Okay, A for agreement. Okay, agreement. And when it is comes, then it's replaced when it 1st of July 2020. 1st of July 2020. The new name of the NAFTA is United States Mexico Canada agreement. Clear? So here, what is who is not a member of the NAFTA? US is a member, Canada is a member, Mexico is a member, China is not a member. So the option number D is right. Then World Trade Organization is based on which of the following principle? Rule-based trading system, free trade principle, dismantling the trade barrier, and D, all of the above. So you know the core principle of the WTO. Okay, the core principle of the WTO is to MFN, that is the most favorable nation, and according to their NT, that is the national treatment, and according to their prohibition of quantity restriction, and third one, that is the tariff concession. Okay, tariff concession. So the WTO, it's a rule based on the trading system, free trade principle, and dismantling the trade barrier. So what will the right answer? All of the above. So WTO is based on the rule based trading system, free trade principle, and dismantle trading barrier. Clear? Next question, that is NAFTA in example of common market, custom market, economic and the free trade area. You know that we have discussed it is a free trade area. Okay, NAFTA is a free trade area. Okay, next question. Euro becomes sole legal tender in major part of Europe in the year. In which year? 1995, 1999, 2002 and 2008. So the euro become a sole legal tender in the major part of euro. So the option number A is here, that is 1995. Okay, no, it's not 1995. It's option number okay, it's a 2002. Okay, in 2002, the 2 months after the introduction of the euro banknote and the coin of a coin on 1st January 2002, the euro become the sole legal tender throughout the euro area. Okay. Now the next question, the government of India has allowed foreign institution investor to invest in all types of security in the primary, secondary capital market since. So option number 1, 1991, 1995, 1992, and the 2003. Okay. So what will be the right answer? The government of India has allow foreign institution investment to invest in all types of security in the private in the secondary capital market. From when they allowed it? They allowed it from the 1995. So option number B. Okay. And it is a foreign institution of investment, FII, and it which means the institution established and incorporate outside the India. Okay. And which purpose to make an investment in the security in India. Okay. And they are registered as a FIIS in accordance with the section 2F, okay, of the SEBI FII regulation 1995. The trade between the countries is financed through the letter of credit is also known as packing credit, pre-shipment credit, documentary credit, and the forfeiting. So you know that the trading between the country is financed with the letter of credit is known as documentary credit. Okay. So the documentary credit is a method of a payment that protect the both the seller, that means exporter, and the importer, that means buyer. Okay, in the contract of a sale. Okay, or in case of seller, it give a guarantee, usual guarantee, and the seller will receive the payment after the shipment of the goods has been fulfilled. Clear? So next question, that is India has been a member of the World Trade WTO. Since India has been member in WTO from when? It is from the 1995. Okay. So option number D is correct. Okay. And in the from the 1st of January 1995. Okay. And yes. Next question, that is a trade related intellectual property right comes in, that is IPR. Okay. It comes into force in the 1947, 1948, 1982, 1995. So you know that 1995 is right. So the trade related aspect of the intellectual property right, that is TRIPS. Okay. So trade related aspect of the intellectual property right was cover the most form of an intellectual property, including the copyright, okay, patents, geographical location, trademark, industrial design, trade security, and the TRIPS comes into force from the 1st of January 1995. The supply curve of the firm is derived from margin cost curve, fixed cost curve, average cost curve, and total cost curve. What is about the supply curve of the firm is derived from? So first of all, what is the supply curve? The supply curve is derived by the comparing the price, okay, price and the quantity. Okay, it's a relationship with the seller. Here, the seller could set the price of goods or the services equals to the zero. Okay, he set the price of the goods and the services which is equals to the zero, and incrementally they increase the price. Okay, after that he was gradually increase the price. At each price, he could calculate the hypothetical quantity. Okay, first of all, he decided to increase his price, and on the basis of price, he hypothetically calculate his quantity. Okay, and it will be the willing to supply and how much he is willing to supply. So this is the supply curve. Okay, so the supply curve is to depend on the marginal, the option number 1, that is the margin cost curve. Okay, so the play a vital role in the margin cost curve in the supply curve. Clear? The next question, That is, what will be the price elasticity of demand by the appropriate method of Q1 is 20,000, Q2 is 25,000, and the P1 is 10 and P2 is 8. Okay, so how do we calculate it? So, the formula of the price elasticity of demand by the proportionate method. So, what is the formula of the, that is the price elasticity of a demand is equals to proportionate change in quantity divided by proportionate change in price. Okay, it's multiplied by price multiplied by quantity. Okay, so how do we calculate it? The proportionate change in quantity, here you can see there is a 20,000 and after that it is a 25,000. So what is the difference? 5,000, ma'am. Okay, clear. After that, the changes in price, you can see the changes in price, that is a 2 rupees. Okay, so here is the 2 rupees and it multiplied with the price is base year price, that is 10, and the quantity is that is quantity number 1. This is price 1 and quantity 1. So it is a 20,000. So when we calculate it, we will get the answer, that is this one, 1 2 3 1 2 3 1 1. So here is 5 by 2 and this 5 by 2 is uh yes, 5 by 2 is 1.25. Okay, so 1.25 is the answer, that is the option number B is the right answer over here. Clear? Yes. Next question, what is the probability that non-leap year should have 53 Wednesday and have a 53 uh Wednesday? It is a Wednesday. Okay, it's a Wednesday. Okay, it's a Wednesday. Okay, so how do we calculate it? So the odd days may be the either Sunday. Okay, there is an odd day. You know that there is a probability of non-leap year. Okay, non-leap year. There is a no leap year. Should be having the 53 Wednesday. Okay, so the 53 is a 53 is Wednesday. So what is that? What do we do? So here either here the odd day may be either Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, or Saturday. Therefore, the total number of possible outcome or the element of the supply is how it is. It is 7. Clear? How it will be 7? Because the days having the 7 days in a week. Okay. Or oh, okay. Or we can write it like a 1 by 7. Okay, it is a probability for the 53 Wednesday. Clear? So the Wednesday is non-leap year over here. So what is the probability of that? Probability of that is 1 by 7. So the option is 1 by 7. How is it is simple? So there is the only things we have to do, that is the what is the he is asking about the probability having the 53 Wednesday. Clear? Again, I'm repeating the answer. What is it talking? He's talking about there is a non-leap year. That means they're having a 30 day, 30 days, 30 days. Okay. In okay. So what is there should be a 53 Wednesday. So how many there is a possibility of how many possibilities they have in the week? They're having a 7 days in a week. So how much possibility there is a out of 7 there is a 1 Wednesday. That's why the ratio is 1 by 7. So the option number B is correct over here. Clear? Now the next question, if the coefficient of correlation is positive 0.8, then the coefficient of alienation will be, the coefficient of alienation will be what? So here the coefficient of alienation will be what? So how do we calculate it? The coefficient alienation will be calculated like there is a formula. Okay. So how do we calculate it? 1 minus r square. Okay. So here is 1 and the r is what? This is okay. So 0.8. Okay, square. So 1 minus 0.64. Okay, and after deducting this 1.64 from the 1, we will get 0.36. Clear? 0.36. So the answer is option number C. The plus no, there is a minus 0.36 point No, plus. Okay, because just remember one thing. Whatever the when we calculate it, we will get the answer in plus. Okay, so the if here is a coefficient is plus, so answer will be plus. Okay, okay. No, option number C. If bxy is zero point 0.6, byx 0.7, then the r. So what is the formula of the r? Is equals to under root of bxy multiplied by byx. So how do we calculate it? Just under root of this, okay, multiplied by 0 0.7. So, so when we calculate it, the answer will be 0.65. Okay, so answer will be 0.65. So the option number minus or plus? Yes, plus. Because because the correlation coefficient carries the sign of plus, so that's why the answer will be, the coefficient answer will be plus. Okay. Now the next question. Which of the following software is used in research analysis? In the research analysis, which software is used by the research analysis? You know that the option number 1 SAP, option number B ERP, option number C SPSS, or the Tally. So here is the option. The right answer is SPSS. So what is the full form of that? Its the full form is statistical. Statistics is package software, statistics software, statistic package of software. So I'm not just remember that's the formula. Okay, sure. So the SPSS is a statistics is a software package used for interactive. Okay, for the batches and statistical analysis and long process by the SPSS. Okay, so it was acquired by, who is acquired? It is acquired by the IBM. Okay, in the year of the 2009, and the current version has been comes, that is IBM SPSS. Okay, IBM SPSS. So right answer is option number C. Next question. Goodness of weight of distribution is treated as, you know, option number A, that is a T test, B chi-square test, C Z test, and D F test. So what will be the right answer? You know that goodness of a fit. Okay, it's related to chi-square test. Okay, chi-square test is the goodness of a fit in the statistical and the hypothesis testing used to determine the whether a variable is likely to come from the specific distribution. Clear or not? Next question. That is, which of the following is a single use plan? Policy, program, strategy, or the method? So here is a, what is a single use plan? You know, policy is single use plan? No, ma'am, because it is used by the two. Okay, one make a policy and who utilize it policy. Okay, the program and the strategy is also having the same things. Then the method methods, and after that there is so what is here? Single use single use plan. Okay. So what is a single use plan? Is a single use plan is a plan are made for handling the non recurring problems. Okay. So that's why the non-recurring problems, the like single use plan are also refers to as the also refers to as a specific plan. Okay, specific plan. And this plan formulate to handle what non repetitive and or the you can say the unique problems. Okay, so the unique problems, which of the following is the single use plan? So you know that is the policy and the strategy and the methods. They having the multiple uses. Okay, but the program is made for the specific purpose. Okay, so here is a program is a right answer. Okay, now next question. In the field of management, the principle of a balance is related to controlling, directing, organizing, and the communication. So what will be the right answer? The field of management, the principle of balance is related to controlling. The management want to control, directing, or organizing, or communicating. So you know that in the principle of the management, the principle you have to balance their organizing. They have to organize the things. Okay, organizing or establishing, and it is an effective authority relationship among the related selected work. Okay, and the persons and the workplace in orders for the group to work together efficiently. Yeah. Now the next question, the establishing the standard is a part of establishing standard is a part of decision making processes, controlling processes, organizing processes, and recruiting processes. So establishing standard is a part of what? So where we establishing, where you use a establishing standard. So establishing standard is a part of controlling. It's a controlling process. So what is controlling process? Is a method that can be used to make sure that the standard are being made within the organization. Okay, within the organization, and it's involved a careful collection of information about the system. Okay, about the system, about the processes, about the people, okay, about the group of the people in order to make a necessary decision about the each. Okay, so the right answer is option number B. Now the next question, the principle of exception is related to the principle of exception is related to controlling, directing, organizing, and the communicating. So what the principle of exception is related to their part of controlling. Okay, why they're part of controlling? Because the function of management which help to seek the plan result to subordinate manager, and is also all level of organization. Okay, so there is exception. Therefore, directing is the principle, organizing, okay, and the communicating. So here the principle of management, what is the principle by the exception state? So principle of the exception, these terms, actually these terms state that the manager should concentrate only on significant deviation rather than the each and every organization activity. Okay, so they have to be make a specific, or the more the manager concentrating control efforts on the significant exception, the more efficient will be result of their control. Okay, so here is the management by exception state that about the how much the management should be the significant deviation rather than the each and every organization activity he has to control. He has to be exception their control. They have to just release their hand to don't take up too much control. Okay, so it will affect on the efficiency. Okay, and which result in the will show. Then which of the following is not an element of the plan? It's not an element of the planning. Principle, objective, policy, strategy. So you know that that is in the principle of the planning, the element which is not comes under, you know that in the planning there is an objective, there is a policy, there is a strategy, but there is no principle. Okay, so there is no principle. The entire process of the planning consists of many aspects. This basically involve the mission, okay, mission, and the objectives, policies, procedures, program, budget, strategy, and all of the above. Okay, so these are the elements, but not a principle. Clear? Now, father of management by objective is who is a who is the father of father management by objective, father of, okay, who is the father of management by objective? That is MOB. Who is the father of MOB? That is management of objective. So what is the right answer? That is Peter Drucker. Okay, Peter Drucker is the father of the management by objective. So what is the what is the sorry management by objective? I wrote it wrong. Okay, so the management by objective, MBO. So MBO is the management practices which aim to increase the organization performance for aligning the goal. Okay, and subordinate the objectives throughout the organization. Okay. So this is management by objective. Either in the other word I can say that is a MOB. It's involved uh, focusing more on result. It's focusing more on result rather than the activity involved. Okay, they're not interested in a MOB management by objective. They are not interested in the activity. They just want a result. So he is what the who is the father of the management by objective is a Peter Drucker. Okay, which of the following is a refinance institution? NABARD, LIC, GIC, UTI. So you know that refinancing institution is only is that is a NABARD. Okay. So National Bank of Agriculture and Rural Development. It is an apex developer finance institution under the jurisdiction of the Ministry of Finance. Okay, of Government of India. And actually the NABARD providing and regulating the credit and the other facilities for the promotion and the development of the agriculture, small scale industry, cottage and village industry, handcrafts and the other rural crafts. Okay, the other rural crafts, the word is ruler. Okay, other rural crafts and the aligned economic activity in the rural area. Clear? The next one, the Reserve Bank of India is statutory body, chartered company, or the public company, or the cooperative. So you know that RBI is a statutory body. Okay, and it was comes in existence in force the 1st of April in 1935. Okay, and the Act of RBI is 1934. Okay, clear. Now, which one of the following is not an instrument of the monetary policy? Bank rate, repo rate, open market operation, and deficit financing. So you know that the monetary policy include a bank rate. Yes, include bank rate, include repo rate. Okay, include a open OMO, open market operation, but it's not include the deficit financing. Okay, so the option number D is correct. That is D is the correct answer. Okay. So, let's understand the what is the deficit financing. Actually, deficit financing is a budgetary situation where the expenditure is higher than the revenue. So that is a deficiency where your expenditure is greater than your revenue. That is a deficiency. And in this, the expenditure revenue gap is financed by their pricing. Okay, pricing of the currency and through the borrowing. Clear? Now the seventh, reverse repo is a tool used by the RBI. Okay, reverse repo is a tool used by the RBI to option number one, regulate a liquidity ratio, regulate absorb liquidity, regulate increase in liquidity with the banking sector. D, keep the liquidity to one level. Okay, so what would the right answer? The reverse repo is a tools used by the REA to absorb the liquidity. Okay, so reverse repo rate is the rate at which the RBI borrow money. Okay, RBI borrow money from the bank for the short term. Okay, so it is a reverse repo. Repo rate means repo rate when the bank borrow from the RBI. Okay, when the bank borrow from the RBI, so it is a it is a repo rate. Okay, is it a repo rate? And what is the reverse repo rate? When the RBI borrow from the banks. So it is a reverse repo rate. So what he is doing, actually what he want to do, he want to absorb the liquidity. Okay, or control the inflation. You can say. And this is important because monetary policy tools employ the RBI to maintain the liquidity and check the inflation in the economy. Clear? Now, the first regional rural bank was established in India. When the first regional rural bank was established in India, you know that is the 2nd of the October 1975. Okay, and the 2nd of the October is 1975. That is RRBS. Okay, Regional Rural Banks of India. Okay, RRBS. That 1975. Clear. Which was the bank started mercant banking services in India? Which was the bank started merchant banking services in India? First option, Punjab National Bank. Second, State Bank of India. United Bank of India. Bank of Baroda. So, what will the right answer? That is option number B, State Bank of India. Okay, the State Bank of India is the India's largest domestic investment bank, and they began in operation in August 1986, and is wholly owned. Okay, it's wholly owned. Yes. Now, the next question, that is GST is. You know that the GST is what? GST is central tax, federal tax, state tax, or local tax. You know that GST is a federal tax. Okay, is applied to the cost of a certain goods. Federal means when the tax is applied on the cost of certain goods and the services. Okay, then the next one, the period of 12th 5-year plan. 12th 5-year plan is 2000. Yes, I have take this question in the first video. You have to, if you haven't watched this video, you go to the playlist of my Dr. Swati, and you can see this. I have explained the all of 5-year plans over there. Okay, so the duration of the 12th 5-year plan is option number B, 2012 to 2017. And this is the last 5-year plan of from the Planning Commission of India. Okay, deficit budgeting is an instrument of fiscal policy, monetary policy, industrial policy, and agriculture policy. So option where deficit budgeting, deficit budget. This word is for the fiscal policy, and fiscal policy. You know that fiscal policy is the policy of the government. Okay, and which involve the government controlling in the level of spending and the tax rate. Okay, and usually the segment into the tax brackets, the brackets that progress to within the economics, and government use these two tools influence the economics. Okay, so which two tools? That is this two tools, that is the fiscal one, and the next fiscal policy and budgetary policy. Okay, so these tools is used by the government. Okay, next, distinguished unemployment is a feature of option number 1, agriculture. Option number 2, cottage industry. Option number C, medium scale industry. Option number D, large scale industry. So the distinct unemployment is a feature of distinct unemployment is a feature of agriculture. It's the agriculture. Distinct unemployment is exists when the part of the labor force is either left without work or working in the manner such that the productivity is zero. Okay, so this is disgust and unemployment. Okay, so it is related to your, just a second, it's not related to your agriculture. No. Is it related? Yes, it is related to your agriculture. It's right. Okay. It's not it do not affect the aggregate output. So it is affected by the discussed unemployment is a agriculture. Okay. Clear. Now the next question, which of the following sector is contributing maximum in GDP in the India? Okay. So following sectors is contributed in the GDP. Okay, so here agriculture sector, B service sector, manufacturing sector, and the mining sector. So what would be the right answer? Yes, who is contributed maximum? You know that service sector. Service sector in India is the maximum, is the largest sector of India and is contributed near about 92.26 lakhs. Okay, crores in Indian, and this is data of 2018-19. Okay, and yes. Now the next question, that is last question, that is income received in India or deemed to be received in India is taxable in the hand of all the SEC, resident, non-ordinary resident, and the not resident SEC. So you know that income received in India or deemed received in India is taxable in all the SEC. Okay, is that the maximum amount of the deduction of the entertainment allowances to government employee is option number A 5,000, B 7,500, C 1/5 of the salary, and D not at all. Okay, so you know that the allowances, the entertainment allowances is going to be provided only and only to the government employee. Okay, and this is this is allowances is allotted to, is not allotted to the non government, or deduction. Okay, deduction of the this allowances is not not uh, allowed to the non government employee. Clear? So, for the government employee, how maximum amount they can deduct from the for the entertainment allowance. So, for the entertainment allowance, the option number one, that is 5,000. 5,000 is a maximum amount that they can deduct from their amount, and this deduction, the entertainment allowance deduction, is exemption. Actually, it's a entertainment allowance is an exemption. Okay, and this exemption is given in the section 6(2). Okay, section 6(2). And here there is a limit, that is either they have a 20% of their gross salary. Okay, and in which they exclude all the allowances, benefits, and the perks, and either the actual entertainment allowance what they paid. Okay, actual entertainment allowance they paid. Okay, they paid, and the 5,000 and rupees 5,000. So whichever is less, it is the deduction amount is will be exempted from their income. Okay, so the option number first, that is 5,000. Clear? Now the next one, the basis of the tax under the heads of income from the house property. Okay, this is going to be repeated again. I'm just going to cross it. Okay, the base of the tax under the heads of the income from the house property. The options is given: rent received, annual value, standard rent, and the municipal rate. So when we calculating the house rent, okay, which is comes under the house property, in the house property there is comes a annual value. Okay, and in the house rent allowances, we compare the fair value fair value with municipal value. Okay, with the municipal value. After that, whatever we get, the amount, okay, whichever is higher, okay, whichever is higher, so that's amount we will get. But this amount must not be, should not be greater than the standard rate, okay, or standard rate. And whatever the amount we will get, then after that we will compare with their rent, actual rent received, and after that whatever the amount is, we get expected rent. When we compare with the standard rate, then we get expected rent, and from that expected rent, when we deduct their actual rent, and whichever the amount is higher, then this is our gross annual value. Clear? So the house rent allowance, what is what is the base of the house rent allowance? That is a annual value. Clear? Let's move toward the next question. Okay. So the deduction, section 37(1) है. Okay, this is the 37(1). 37(1) shall be allowed for those expenditure which are of nature. Okay, so the section, the deduction or the section under section 37(1) is allowed to the expenditure. In which expenditure the deduction is allowed? Option number 1, revenue. Option number B, capital. C, both, and D, none of the above. Okay, so what will be the right answer for the 37(1)? The revenue expenditure is allowed. Okay, what revenue expenditure? Clear? And the expenditures of business is having a section from the 30 to 36. Okay, and in 37 there is one, there's a deduction of the revenue. Clear? Next question. When a person reduce his total income by taking a false claim, it is a process of. It is a process of. Okay. When a person reduce his total income by making false claim, that means they actually false claim that either they showing their expenditure higher, they showing their income is low, okay, or anything with the false statement if they showing. So it is a process of tax avoidance, tax evasion, tax planning, and tax management. So you know that if they are making a false claim, and false claim means there is a tax evasion, and you know that the tax evasion is basically, it is a illegal, illegally whatever we are doing to reduce our tax, so it is comes under the tax evasion. And you know that this a tax evasion is a illegal activity in which a person avoiding to paying true tax liability. Clear? Now next question. So the B is correct answer. Okay, B is correct answer. Next question. Question number 30. Return on income is submitted under the following section. Section 138, Section 139(1), Section 142. So what will be the right answer? For the return on income, what will be the section? The section 139A. Okay, for return on income, 139A is the correct. So option number B is correct. Now the time limit for filing a complaint before the district forum under the Consumer Protection Act 1986, whenever. Okay, so here is he is talking about the Consumer Protection Act. So if the consumer having any complaint about their product, about their services, so what is the limit is given, he can claim his he can complaint before the district forum. What is the time limit? 1 year, 2 year, 3 year, or there is a no limit? So what will be the right answer? Yes, this is the right answer. That is option number 2, 2 year. They having within the 2 year, they has to raise a complaint. Okay, raise a complaint in the front of a district forum. In the front of district forum. Okay, So this is the really much time they have giving, and if the condition is allowed as per the product durability and the warranty and the guarantee. Okay. Next, who propounded the word privatization? So who propounded the word privatization? Mayon, Elton Mayon, F.W. Taylor, uh, Urwick, or the Peter Drucker? So for the privatization, the Peter Drucker. Okay, privatization for the Peter Drucker. And what is a privatization? Is a process of transferring of the ownership or the management of an enterprises from the public sector to private. Okay, to private sector. Okay, and that's why it helps to increase the size and the dynamize the private sector. Okay, so it is given by the Drucker. Okay, the next question, Jan Dhan Yojana is related to priority sector lending, financial inclusion, microfinance, non-performing asset. So what is the Jan Dhan? First of all, the Jan Dhan Yojana is announced by the Pradhan Mantri Jan Dhan Yojana, and is a financial inclusion, and it is a financial inclusion program, okay, by the government of India, and which is applicable. It's applicable to 20 to 65 years of age, okay, age group. And so the Jan Dhan Yojana is related to financial inclusion. So in which the aim of the Jan Dhan Yojana is to expand and make the affordable access to the financial services. Okay, like a bank account, like a credit, like a insurance, like a pension. So this is comes under the Jan Dhan Yojana, and this is a financial inclusion. Clear? Which act was replaced by the introduction of the Competition Act 2002? Option number 1, FERA. Option number 2, POTO. Option number 3, MRTP Act, and the POS, POCSO. Okay. So the Competition Act 2002 is replaced to the, you know, that MRTP Act. Okay, and the MRTP Act is 1969. Okay, it is 1969. Clear? And FERA is replaced to FEMA. Okay, is replaced to FEMA. The next question, withdrawal of state from the industry is called. Withdrawal of state from the industry is called modernization, liberalization, privatization, globalization. So withdrawal of state from the industry is called as privatization. What we are doing? We are withdrawing from the industry. What we withdraw from the industry? We withdraw the public sector and we convert it into the private sector. Okay, so this is a withdrawal of the state of from the industry. So it is a privatization. Next question, special economic zone in India is motivated by the experience of. Okay, so the special economic zone, SEZ. Okay, so SEZ introduced is in India, and what are the from where, from which country this motivation, the special economic zone, this is motivated by the which country? China, Japan, USA, Germany. So you know that, yes, it is from the China. Okay, and the special economic zone is located within the country on the boundaries of the nation. Okay, and what is the aim of the special economic zone? It's aim to increasing the trade balance. Okay, trade balance, employment, increase in investment, job creation, and effective administration, so that the creation of the special economic zone by the most country can be motivated by the desire to attract the FDI, foreign direct investment. Okay, so the special economic zone, it's also useful for the attracting the foreign direct investment. Okay, so the option number one from the China. Next question, what does 3 Ps initiative refers to? You know that 3 Ps initiative is a public policy paper, public private partnership, private procurement policy, and the personal production proposal. So you know that the 3 Ps initiate for the public, private, and the partnerships coordination. Okay, coordination, clear. Next question, when was the first industrial policy resolution formulated in India? So it is a is the this the industrial policy resolution. The firstly is formulated in India in option number A 1947, 1956, 1949, and option number D 1915. So in that this is the first industrial policy. So it is 1947. Okay. So it is a 1947. So things we have to discuss in this, that is in 19 what has happened in 1956. 1956 is for the IPR, that means industrial policy resolution. Okay, is also enacted in the 1956, and this resolution developed by the Indian Parliament in April 1956. Yes. And in this 1956, this is the second act of this act of the India Industrial Policy Resolution 1947. So in this 1956 policy, this continue to constitute the basic economic policy for a long time. Okay, just a second. The option is in 1947 is not correct. It is a 1956. Okay, the 1956 is the first industrial policy resolution. Clear? The next question, which of the following is a type of efficiency ratio? Debt equity ratio, current ratio, working capital turnover ratio, net profit ratio. So here the debt equity ratio. So what will be the right answer for this? You know what is the efficiency ratio? So efficiency, how do we calculate the efficiency? So for calculating efficiency, we need a capital. Okay, in the basis of capital we can calculate our efficiency. So the working capital, which capital? Working capital turnover ratio is calculated by dividing the average amount of working capital divided with the net annual sale. Okay, and the current asset minimize, and how do we get to the working capital? Current asset minus current liability, and during the 12-month period. Okay, that the working capital is having the capital of less than 1 year. Okay, so the option number C, that is working capital turnover, is the right answer. Next question, when fixed cost is 7,000, profit is 3,000, sale is 50,000, then PV ratio will be. So let's calculate it. You know that what is the formula of the PV ratio? The PV ratio formula is contribution divided by sale multiplied by 100, madam. Okay. So when we elaborate it, so we are the contribution is, so sales minus variable cost is a contribution, and from the contribution when we deduct our fixed cost, then we will get a profit. So can I say the contribution is a sales minus variable cost, sales minus variable cost, and divided by the sales multiplied by 100. Okay, so what the data we have already given, that is fixed cost and the profit and the sale. Okay, so in this formula, there is no fixed cost, there is no profit for formula. So what we do over here, we do the, you know that if I'm just giving the example to you. Okay. Is suppose it here is an 100 is a sales. Okay, variable cost is 20. Then we'll get contribution is 60. Okay, and then in this 60 we have the fixed cost of rupees 40. So we will get 20. So you know that this contribution is 60, and in this fixed cost when we add a profit, so we also is equals to the contribution. That's why can I write a contribution is a fixed cost plus profit? Okay. So in the contribution place, can I put fixed cost plus profit? Yes, ma'am. So the fixed cost plus profit divided by the sales multiplied by 100. So the fixed cost is 7,000. Profit is 3,000. Okay. Here is sale is 50,000. So it's multiplied by 100. So there is a 10,000 near 50,000. Okay. So when we calculate it, we will get the answer of 20,000. Okay. Sorry, 20%. So what will be the right answer? The option number B, 20%. Clear? Next, higher the ratio, more favorable, higher the ratio, more favorable it is. This does not apply to. So here is higher the ratio, that is more favorable. The things is way more favorable. Net profit ratio, yes, the net profit ratio is higher. So the it is favorable to. And the stock turnover ratio, operating ratio, and none of the above. So, sorry. The net profit ratio, if the net profit ratio is higher, so the company is saying that there is a favorable because our profit is increasing. What is about the stock turnover ratio? Stock turnover ratio is a cost of goods sold divided by the sale. So the it is if it is higher, so it is also favorable in the company. What about the operating ratio? Operating ratio is related to the here the expenses, operating expenses divided by the sales. So here the expense, if it is higher, so it is assumed that the expenses is greater than our sales. Okay, so this is unfavorable. So that's why it do not apply to the operating ratio. Next question, in accounting, profit prior to incorporation is treated as capital reserve, revenue reserve, secret reserve, or the general reserve. What about the capital profit prior to incorporation? The prior to incorporation, if a company earn any kind of accounting profit, if they serve the that profit like their capital reserve, because they're reserving that profit to for their capital making, and this is an account that equity section of the balance sheet, and this can be used for contingents. Okay, whatever the in case of any offset of the capital losses. So that's why we move the any in the accounting profit prior to incorporation to the capital reserve. Clear? Next question, old profit sharing ratio minus new profit sharing ratio is equals to, when we from the old profit sharing ratio, we will deduct the new profit sharing ratio. So what happened? This is old, we compare with the new. There is an when it is happened, when they having it is a sacrificing, when the partner sacrificing. Okay, in that case the old per ratio is minus new ratio, it is a sacrificing ratio. Okay, so the option number C is correct over here. Next question, in the cash flow from the financial activity is included. Option number 1, issue of share capital. B, individual dividend received. C, transfer to reserve. D, capital paid employed. So here the cash flow from business activity, okay, the cash flow business activity is a section of the company's cash flow statement, okay, and these statements show the net flow of cash, and which is they are used to fund the company. Okay, so financial activity including involves, we can see your financial activity with the with the issue of share capital, how much they are issuing. So this is issuing share capital, it is a financial activity. Dividend receiving is not a financial activity, okay, it's a investment activity. When you are invested, then you will get, then you will receive the dividend. Okay, transfer of the reserve is also not a financial activity, and the cash paid to employees, it's a operating activity. Okay, transfer to general reserve is also an operating activity. Clear? So the option number A is correct over here. A is correct. Clear? The next question, among which of the following item will result in the flow of the fund? A, credit sale of a building. B, issue of bonus share. C, goodwill written off. D, transfer of profit to general reserve. So what will be the right answer? You know that the item will result the flow of a fund. So how do we get that? The credit sale of the building. So in the credit sale of the building, we can see there is an source of the fund. Okay, there is a relationship with the what, current asset and the non current asset. There is a relationship between the current asset that means a cash, okay, non-current asset that means a building. Okay, so whenever you see the relationship of the current asset, current asset with having the same with the current non-current asset, so in that case this is the flow of fund. Here you can see the flow of fund. Then the issue of the bonus share. In the issue of the bonus share, the company, there is a non-current liability, okay, but there is another effect, there is no such case of, because the issue of the bonus share is issued by the within the company, so there is no cash issue. So that's why the issue of bonus share is not comes under the flow of fund. Then the goodwill written off is also the actually the amount, the current asset is not deducted, we are just estimating that the goodwill going to be written off, so that's why there is no specific transaction. And the transfer of the profit to the general reserve, we are just transferring the profit from one place to another place, so that's why this also option is not a flow of fund. So option number A is a flow of fund. Okay, credit sale of building. Now the next question, premium received on issue of share can be used for. Option number A, payment of dividend. Option number B, return of preliminary expenses. Option number C, payment of the director fees. Option number D, redemption of debenture. So what will be the right answer? The right answer is option number B, that is return of preliminary expenses. Because premium received on issue of share, it will be written off from the preliminary expenses. Okay. So here the security premium account can be used for return of the preliminary expenses of the company. Okay, and for return of the expenses of issue of share and debenture, such commission paid or the discount given on the issue of share, the share. Okay, so the That's why the premium received on issue of share will be written off from the preliminary expenses. Clear? The next question, that is, in comparison to perfect competition firm, a monopolist competition firm. Option number A is similar in size, B produce a differential product, and C has a more freedom for entry and exit, and D spend more on advertisement. Fourth one, product differentiation product. Option number B is correct over here, because when we compare the perfect competition firm, a monopolistic competition is having there is a differentiation, that in the perfect competition there is a homogeneity in the product. Okay, in the homogeneity in product, and okay, homogeneity in product, and in the monopolist competition there is a product differentiation, like a mobile. Okay, so mobile, we use a mobile for the one purpose, either we use the internet in the use of you do study in the YouTube channel, or either for the call, but there is a different products available in the market. Okay, so this is what, this is according to their price, according to their quantity, according to your standard, according to the brand. Okay, and so in this way, so there is a, in the monopolistic competition there is a product differentiation. Clear? And there is a heterogeneous product. One more thing, that is a heterogeneous heterogeneous product. Clear? Next question, in which of the following area indifference curve is not used, where we do not use the indifference curve? Consumer equilibrium we use in difference curve, producer equilibrium in the fixed of exchange, in the fixed of substitute. So you know that the in the consumer equilibrium we use the indifference curve. Okay, for the producer we use the indifference curve equilibrium. Okay, in the field of exchange we also use the indifference curve. Okay, but in the field of substitute, because in this case of substitute there is a positive relation between the substitute. If the price of the one increases, okay, so the quantity of the another is decreases. Okay, so there is a positive relation, there is a negative. Okay, so negative relationship, and this is not applicable in the indifference curve, because indifference curve is showing the combination of the two goods that give the consumer equal level of satisfaction. Okay, of their utility, and each point in the indifference curve indicate. Okay, if this is an indifference curve, okay, so the each point in the indifference curve is indicate the consumer is the different between, there is an indifference between the, there is an indifference between two and all the point given by him in the same utility. Clear? So the option number D. Option number D is correct. The next one, the equilibrium level of output for pure monopolist is where? In equilibrium level, na? Equilibrium in the pure monopolist. In the equilibrium point, you know that where is an equilibrium, the equals to signs is comes. So the where option number 1, MR is equals to MC, MR is less than the MC, P is less than the AC, and MR is greater than the MC. Okay, so what will be the right answer for the equilibrium? It is option number A, MR is equals to MC. Clear? And you know, in the what is the meaning of that here, where the MR is equals to the MC. If I draw it, okay, if the MR marginal, a second, okay, This is marginal revenue is the MR, okay, is equals to the MC curve goes like this, okay. This is an MC curve. So at the point they are equilibrium, these equilibrium point to show the profit will be maximum in this point, okay, will be maximum in this point. This point the profit is maximum, and beyond this point the producer will stop producing, and after this point, beyond this point, this area, so what happened in this area, the producer stop producing the goods, because this is a maximum profit which he has earned, okay. So beyond this point he stopped the producing. So the option number A is correct here. Then the fifth question, the nature of the business economic is perspective, descriptive, of the positive sense, and all of the above. So the nature of business economics is a perspective, because it gives the perception, okay, rather than the description. So in the economic theory, we build a law, such a law of demand, okay, law of a diminishing marginal utility, okay, and a diminishing return, law of diminishing return. And in this business economic we apply this law for policy planning at a level of the firm. So the option number A is correct, that is business economics is a perspective in nature. Which one of the following is not a function of new issue market? Okay, so option number 1, organizing. A is the organization of the security. B, underwriting of security. C, distribution of security. And the administration of security. So what will be the right answer? It's not. One of which is not a function of a new issue market. So for new issue, the issue of a stock, okay, or the bonds, they are being sold to the investor for the first time. This new issue can be a initial new issue, okay. So it is a initial public offering, IPO, okay. And in this IPO, the company it issue their new issues of a floated by the organization, and that has floated many such issue in the past. So it's not what is a not a function of the new shop market. They can origination of the security, yes ma'am, the origination of the security is in new issue. Underwriting of security is also there, distribution of security is also there, but we do not administrate, because a new issue is related to your IPO, so we did not administrate this security. So the option number D is correct for this question. Let's move toward the next question. Which center is not established in the responsibility accounting? Which center is not established in responsibility accounting? Option number 1, revenue. Option number B, investment. C, budget. And profit, okay. So what will be the right answer? You know what is a responsibility accounting? Responsibility accounting is a systematic system of controlling when where the responsibility is assigned for the control of cost, okay. And here the person are made responsible for the control of the cost. That's why the responsibility accounting is going to be created. So for that, to evaluate this responsibility, proper authority is given to the person, so that they can able to keep up their performance, okay. So what they do, here is the type of responsibility center. So what are the types of response? They are asking about the center. So there is a type of responsibility center is first, that is a cost center. What is it? Is a cost center. So what is the cost center? Cost center, actually it is a it's a kind of a department in which supervisor supervise, allocate, segregate, and eliminate all the sorts of the costs related to the company. Clear? So here what do they do? This is they primarily check the cost of an organization and to limit the unwanted expenditures. Okay, and next one, that is revenue center. Okay, so what they do in the revenue center, it's accountable for the initiating and the monitoring the revenue. What they're doing, they're monitoring the revenue. Okay, and the management does not have any control over the cost or the investment, but they can monitor their revenue. In a few expenses they can maintain in the market section. So the production of the revenue center is calculated by analyzing the budget. Okay, budgeted revenue, whatever the budgeted revenue they have decided, so they can match with that with the actual revenue they get. Okay, so the actual market expenses with the budgeted market expenses. So this is the revenue center. The third one, that is the profit center. What is it? Profit center. So what is the profit center? Is a division or the department. Yes, and in this department the company has operated the calculation of their profit. Okay, what they're doing, they're calculating their profit. And what they do, the organization and different they manage by the manager. Okay, and who identify the profit on the basis of the cost and income. So in the profit center is accountable for all the action which is associated with the sales of goods and the production. Clear? The next one, that is the fourth one, for that is for the investment center. Okay, so in the investment center, it is actually the responsibility for the both what, for the investment, and for the revenue. Okay, so there's a responsibility. And in the investment, manager can control their expenses. Okay, income, the fund invests in the asset. Okay, and he also having the authority to form a credit policy. Okay, which has an immediate impact on the debt collection. Okay, debt collection. So there is a cost center, okay, revenue center, profit center, investment center. Okay, in the responsibility accounting. But yes, the budget center is not in there. It's not a response. It's not comes under the center of the revenue center of the responsibility accounting. So the budget C is the right answer for this question, because it is a not. So revenue is my revenue center is, investment center is, and profit center is. And along with that, one more, that is the cost center. Clear? Next question. First private sector mutual fund in India. Which one of the following is the first private sector mutual fund in India? Option A, Kothari Pioneer, Kotak Mahindra, Reliance Capital, and IDFC. So what will be the right answer? There is a right answer for this, that is Kothari Pioneer. Okay, so Kothari Pioneer is, he is the he was the first private sector mutual fund which is registered in the near about July, yes, in the July 1993. Okay, in the 1993. And in the 1993 SEBI regulation was substituted by more comprehensive and revised the mutual fund regulation 8. Okay, so then after that they revised this mutual fund regulation in 1996. Okay, so they established it in 1993, and after that the SEBI regulate it, and the new the comprehensive revised mutual fund registration is done in the 1996. Okay, so what will be the right answer, and which is given by the Kothari Bihari pioneer. Okay, so the option number A. The cost of capital from all the source of fund is called specific cost, composite cost, implicit cost, or simple average cost. So here is composite cost is the right answer. Now I will explain you what is a composite cost. Okay. So the composite cost of capital is the company's cost to finance its business determined and also refers to it is an weighted average cost of capital. It is a WACC. Okay. And this WACC, or you can say it is a WACC. Yes. The company's debt and equity. Debt and equity. Okay, so what is cost of capital? You know that cost of capital, we calculate the cost of capital on the basis of the whatever the debt, what is the debt have the company as compared to their equity, and from the all source of the fund. Okay, so what um so here the capital structure typically include the common stock, preferred stock, bonds, and they also long-term debts. Okay, so the cost of capital from all the resources of the fund is a composite cost because he include a debt equity, include a common stock, include a preferred stock, include a bonus. Sorry, bond. Okay, bonds. Okay, and bonds and equity, or we have already discussed that is the stock is also in this preferred stock, common stock, and the long term debt. Okay, long term debt. Yes, so option number B, that is the composite cost. Okay, all source of fund is a composite stock, so the option number B is right over here. Next, which one of the following? Again, it's not an accounting software. It's not an accounting software. So, Tally, Oracle, Profit, SPSS. So, what will be the right answer? You know that what is a SPSS? SPSS is means a statistical package for the social science, and it's used by the various kinds of the researcher for the complex statistical data analysis. Okay, we have to use it for the statistical calculation. Okay, and the SPSS software package was created for the management and the statistical analysis of the social science data. So you know that Tally is an accounting software, and the Oracle is accounting software. Profit is also accounting software. We have to use in the accounting as accounting software. But the SPSS is a statistical to calculate a statistical value of their research. Clear? So that's why the D option is correct. That is SPSS. Next question, which of the following terms is used to represent the proportionate relationship between the debts and the equity? Cost of capital, capital budgeting, asset structure, and the capital structure. The question is talking about where the term is used, a proportionate relationship between the debt and equity relation. Okay, so where we discuss it, we discuss in the we when we make a capital, we structured our capital. Okay, so we use the debt and the equity to structure our capital. So the option number D, when the cost of capital, we calculate the how much cost we need to need for the capitalization of our firm. Okay, capital budgeting is related to how to budget your capital. Asset structure is for the it's related to your asset side of the balance sheet. Clear? So the D is correct answer over here. Next question, when a company take over another one and clearly become a new owner, okay, the action is called as merge, acquisition, strategic alliances, and none of the above. You know that when a company take over another one, please take over the another one and clearly become a new owner. Okay, owner action. So it is called as, it is takeovering. So that's why it is a acquisition. Okay, so the option number B is correct over here. So you know that in the corporate finance there is a merge, acquisition are the transaction in which the ownership of the company and the other organization is going to be transferred from the one to another, and they make a consolidation of the other entity. Okay, next question. In India, dash has a predominant share in the debt security market. So in India, the dash has a predominant share in the debt security market as government security, corporate deposit, corporate equalities, and the GDR. So in India, dash as a predominant share in debt security market is a government security. Okay, so the government security is the are the government debt issues used to fund daily operation. Okay, and the specific infrastructure and the military project, they guarantee the full repayment of the investment principal at the maturity of the security. Okay, clear? So here is, for the predetermined share, the debt security in the market is in India, that is a government security. Clear? They prefer a government security as compared to the other one. The next question, which is in your screen, that is the rate of discount at which NPV of the project become zero is known as. Option number A, average rate of return, IIR. This is a ARR. This is a IRR. That means the internal rate of return, alternate rate of return, and none of the above. So where the word is discount, okay, at which NPV project is become zero. NPV project becomes zero. This is nothing but IIR, because in the IIR we see the inflow. Here you can see that is cash inflow. Okay, so cash inflow is equals to their cash outflow. Okay, so that's why the NPV is equals to zero. You know, in the internal rate of return, it's basically the matrix used in the financial analysis to estimate the profitability of the potential investment. And in the IIR is a discounted rate that make the NPV value of all the cash flow is equals to zero in a discounted cash flow analysis. And this is a discounted cash flow analysis. Clear? And the ARR is a non-discounted. It's a non-discounted. Okay. The next question, that is 60, stock exchange is a state subject, center subject, regional subject, corporate subject. Stock exchange is what? It is a central subject. Okay, it is a central subject. The stock exchange in the marketplace where the financial security issued by the company are bought and sold, you know, and basically they are a part of the broad capital market ecosystem, and in the security issued by the company, such shares and the bonds are traded on the stock exchange. Clear? And you know that this is a related to your primary market, and this is related to your primary market. Okay, stock exchange. Clear? Now the next question, 61, accounting for amalgamation company is done as per the section accounting standard 4, accounting standard 10, accounting standard 14, accounting standard 20. So for the amalgamation, the accounting standard 14. Okay, so accounting standard 14, you have to just look all the accounting standard, Indian accounting, IAS. Okay, so Indian accounting standard, you have to, the recently they are asked for the question from this area. Clear? Next, the statistical tool used to measure the company's risk. There isn't a possibility they can ask the question from the accounting standard also. So you have to be prepared with your from every. Don't just leave any corner of our syllabus. Okay, so just go through with the whatever they given. Okay, the syllabus. Next, the statistical tool used to measure the company's risks by the mean, mode, variance and the covariance. So what will be the right answer? The statistical tools used to measure the company risks. You know that the company's risks is going to be scattered like this. Okay, so here what we use a mean, or we use a mode, or we use a variance or covariance. So it is better to use a variance. Okay, because variance is a measure of a variability. Okay, and the variability we found in the market, in the market, and that's why the company has a face the risk. Okay, and it is calculated by taking the average of the square deviation. Okay, average of the square deviation from the mean. Okay, from the mean, and the variance tell you the degree of spread in your data set, and more the spread of the data, larger the variance in the relation is the mean. Clear? So here is the variance we used. It is a statistical tools which used to measure the company risk. The next question, the world first electronics stock market is Kospi, Nikki, Nick, uh, NASDAQ, and Dow Jones. Okay, so the first electronic stock market in the world is option number C, that is NASDAQ. Okay, so the NASDAQ is a global electronic market where where they buy buying and the trading the security, and it was a world first electronic exchange. Yes, and the most of the world's technology giant, including the Apple, Facebook, are listed on this. Okay, so the option number C, that is NASQAD. And comment me in the comment box of what is the full form of NASQAD. Okay, then the next question, the financial market for the residual claim is known as debt market, equity market, exchange trade market, over the counter market. So you know that is a financial market for residual company. Okay, claim. Residual claim is known as equity market. Okay, equity market. So why it is? Because the right of the shareholder of the other right of the shareholder from the other party, the profit of the company after all the prior obligation has been paid. Okay, so who suffer the most? The equity shareholder. Actually they claim for the residual claim. Okay, they can equity claim as also known as the residual claim. So here is the financial market residual claim is related to the equity market. They can, because the equity shareholder get in the profit, and after the all the profit is distributed to the debtors, to the long term debtors, to the preference share, and after that at last he will get profit. Okay, so so many times there is a loss in the company, that's why they are claim their residual claim. Okay, so who is eligible for the claiming the residual claim? The equity shareholder. Clear? Next question, in the calculation of the total risk of a security, unique Okay, what is it? Security unit risk is also known as, okay, the calculation of, when we are calculating the total risk, security unique risk is known as option number A, systematic risk, option number B, unsystematic risk, option number C, non-diversifiable risk, and option number D, market risk. Okay, so what will the right answer? You know, for the security unique risk, there is, it is related to your unsystematic risk. Okay, so what has happened in the systematic risk? In the systematic risk, it is where the profitability of a loss link with the whole market, okay, segmented, and such as changes in government policy. Okay, the government policy, like they change their uh, government policies for some particular thing, like import export, okay, or the tax regime. So these are the systematic risk. Okay, after that, this, while the risk is associated with the particular industry, is referred to the unsystematic risk, where the, it's like a labor strikes, okay, climate change, which adversely affect to our production. So it is a unsystematic risk, that the risks which we cannot control. Okay, so this is an unsystematic risk. So here is a total risk of security unique risk. Okay, so the unique risk is known as a unsystematic risk. Clear? Now the next question: National Stock Exchange introduced the screen based training in the year 1992, 1994, 1995, and 2002. Okay, so the NSE launched electronic screen-based trading in 1994. Clear? 1994. That is derived the trading and internet trading in 2000. Okay, so the National Stock Exchange introduced a screen-based training, that is related to your what? It's related to your online, or you can, it using the internet trading, okay, using the internet, and which were each first of its kind in India. Okay, so the right answer is 1994. The National Stock Exchange introduced screen based training in the year of 1994. Clear? Next question: which one of the for which one is not a set of social accounting? Option number A, environmental accounting. Option number B, sustainability accounting, and the shadow accounting, and the energy accounting. It's not a social accounting. You know that is environmental accounting is there, sustainable accounting is there, accounting, energy accounting is there. What is a shadow accounting? There is no such a terms. Okay, so the shadow, there is a shadow accounting, but this is used for the practicing to calculating the incentive. Okay, it's calculating for the incentive pay out of by the individual pay, apart from the official accounting record. Okay, for the purpose of detecting the error. Clear? So the option number C is correct. It is not a social accounting. It is a incentive used for the practicing of calculation. Clear? And what is the social and environmental accounting? We use a social and environmental accounting in terms of umbrella. Umbrella. Okay, we use the umbrella, and it is actually this basically it's describe the impact of a business activity on the society. Okay, both it is it is on the local basis, or it is on the international basis. Okay, to the employee and the consumer, and it's offer a mechanism for reporting the information that enable the management to monitor key social and the environmental opportunity and treated financial organization. Clear? So you know that this is all are the societal accounting, but the shadow accounting, it is a practical practice of a calculation. Here we see the calculated the accuracy of payout ratio ultimately. Okay, in the shadow accounting. The next question, the permanent working capital is generally financed through. Permanent working capital is generally financed through option number 1, long-term capital fund, option number B, government assistance, option number C, internal financing, option number D, short-term loan from the bank. So what will be the right answer? Permanent working capital. The word is permanent working capital is generally through the, you know that what is a permanent? The things which is go longer. Okay, so the long term capital is fund to the long term working capital is a permanent working capital. Clear? Yes. The next one, that is in what next question which is in your screen, in case a project are divisible under the capital rationing, and appropriate project appraisal method is, okay, net present value method, profitable index method, internal rate of return method, and pay back period method. So what will be the right answer? In case of project are divisible under the capital rationing, on appropriate project appraisal method is used. We use over here, when you use a capital rationing, this word we have used the, that is a profitable index method over here, because this is a profitable investment ratio. Okay, so the value, it's a relationship between the profitable investment ratio and the value investment ratio. Okay, and here the ratio of payoff to investment of the proposed project, and it is useful tools for the ranking project, because it's allow you to quantify the amount of the value created per unit of the investment. So that's why it is a capital rationing in the project is divisible under the capital rationing. On the appropriate project appraisal method, it is a profit index method. Clear? So the option number B is correct over here. The next question which is in your screen, window dressing is prohibited due to. Okay, so what is the, first of all, what is the window dressing? Window dressing is that means your window dressing, that means your change the information in accounting record for getting the benefit from the outside party. So this is the window dressing. Okay, so as per the, and so here this is a prohibited as per the as per the prohibition of the convention of disclosure, because in the window dressing we are dressing in the front of the I'm not getting it. So in the window dressing, what we're doing in the window dressing, we are just hiding our loopholes, okay, and we are showing the exaggerate things, okay, of our company. So what is the window dressing is prohibited under due to the convention of disclosure. That means the company said that you have to disclose each and every things in a true and fair way. Okay. The next question, that is question number 71, lifestyle, one of the major basis of segmenting market. Option number 1, socio-economic, option number 2, demographic, option number C, psychographic, and the none of the above. So what is the right answer? Yes. The right answer is option number C, psychographic. Why it is the psychographic? You know, the lifestyle is one of the major on the basis of segmentation. Lifestyle is comes under the psychographic. You know, in the psychographic, there is, we see the lifestyle. Okay. Lifestyle is affect the market. Then the personality traits affect the market, and the value and attitudes of the customer, attitudes. Okay. And the activity or the interest, and the, this is first, second, third. Okay. Fourth one, that is activity, or you can say the interest and opinion. Okay. And the fifth one, that is the social status. Okay. So these are the demographic measures of the basis, on the basis of the psychographic. Okay. So this is a, sorry, this is comes under the psychographics of a segmentation market. Okay. So the lifestyle, personality trait, value of attitudes, activity, interest and opinion, and the social status. Clear? So the option number C is correct over here. Online marketing is associated with segmentation, product life cycle, distribution, and packaging. So what is it? You know, that on, it's a online. Okay, this is a one word, online. Okay, so the online marketing, it is what, you know, that the online marketing is a distribution of the product. Okay, so online marketing is a practice of leveraging the web based channel to spread a message about the company's brand, product. Okay, and the potential customer. The method and the technique used for the online marketing, including email, social media, display advertising, search engine optimization, Google, Google. Okay. So these are the online marketing. Here what they do, they distribute. They are related to the distribution. They are not segmenting. They are not they make it's related to product life cycle. They are not packaging. They are not the, in the distribution it's include a packaging. Okay. So that's why option number C. Penetration pricing, you know, that charging the penetration, high prices, charging low prices, charging the competitive prices, and none of the above. You know that we have discussed the question in the last video, but the question is asked in the different way. Okay. So the way of asking the question in this question is a different way. So there is a charging a low price. So it is a penetration pricing. Next question. Here is the option number B is correct. Clear? Next question, that is a physical physical distribution provide place utility, time utility, place and time utility, and the form utility. So physical distribution is related to your place, yes, and the time you spend. Okay, the physical distribution include all the activities associated with your supply of the finished goods. Okay, at every steps of the production line to the customer. Okay, and it is an important function which includes the customer services. Okay, ordering process, inventory control, transportation, logistic, and the packaging and the material. Clear? So the option number C is right for this question. The next question which is in your screen, that is, which element of the promotion makes a do wholesaler generally applied to obtain their promotional objective? So what is the right, which element of the promotion mix? Okay, is who do the wholesaler generally apply to obtain their promotional objective? So what is right? Advertising, personal selling, trade or promotion, and the direct marketing. So what will be the right answer? The option number C. Okay, that is a trade promotion. Trade promotion, it is a kind of a promotion mix do the wholesaler. Okay, they want to promote their objective. Clear? The trade promotion refers to the marketing activity that is executed in the retail between the two partners. Okay, and what is a trade promotion? Trade promotion, it's a marketing technique aimed at increasing the demand for the product in the retail store based on the specific price, display fixture, demonstration, value added bonus, and no obligation gifts and the more. So that's why the trade obligation is related to your wholesaler. Okay, so he want to do the trade promotion, not the product promotion. He is focus on the trade promotion. Complete concept. Which concept of marketing is based on assumption that superior product sell themselves. Okay, option number one, production. Option number two, marketing, societal, and the product. So the it what is which concept of the marketing is based on the assumption that superior product will sell themselves. So the author says that if the products having the superior quality, so you do not need to to take a extra efforts to sell the product in the market. So this is what they're doing. They're focusing on the quality of the goods. Okay, the superiority in the of the quality in the goods. So it is the quality of what? It's the quality of the product. Okay, quality of the product. So that's why the option number D is correct, that is the product. Okay, clear? Let's move to the next question. Which subject is relevant for the study of a consumer behavior? Okay, so first option economics, second psychology, third is sociology, and fourth one all of the above. So the subject is relevant for the study of consumer behavior. So for the study of consumer behavior, what we need the economic things, economics, so the and the psychological or the sociological and the all of the above. So here, you know what is the consumer behavior? Consumer behavior, in which consumer behavior we study the how the individual customer or the consumer or the group of organization, okay, they how they select, how they buy, how they use, how they dispose how they idea of the goods and services to satisfy their needs and wants. Okay, it's referred to an action of the consumer in the marketplace, and it's underlying the movie is motives for those action. Clear? So what is the right answer for this question? Yes, there is an economic, psychological, and the sociological having the relevant to the, because the things in the economically they affect the psychologically and they also affected with the sociologically. So the option number D is correct over here. So D is the correct answer for this question. Next question, which is in your screen, that is public distribution system is related to. Option number A, marketing system. Option number B, retailing system. Option number C, industrial system. And the D, selling system. So the public distribution, what is? It is the public distribution system is related to your your retailing system. Why it is relating system? Just because in the public distribution system it is related to their retailing system, because in the public distribution system it is a network for the fair price and shop where the necessity commodity and the staple food grains are provided to the poor people. Okay, fair price for the poor people. And you know, here the low prices are compared in the market. Okay, so that's why the retail system is a distribution is done to the retail shop. Okay, for the public, what will they need? They need a retailing system. Okay, So the option number B is correct for this question. In India, which pricing strategy is not permissible? Which pricing strategy is not permissible? Penetration, scheming pricing, and the predatory pricing. This is really important question. Okay. So tell me what will be the right answer for this question. You know that it's not permissible in India. So penetration is permissible because you see the penetration scheming in the geo. Okay, and the scheming, the scheming pricing is also in India. You can see is the example of the Apple, because he charges high prices for his new launch product like a car, like a Apple mobile. Okay, so these tools are permissible in the Indian market, but the predatory pricing, it's not permissible in the India. So why it is not permissible? Because it is an illegal act of setting the price low in an attempt to eliminate the competition. Okay, so the periodic pricing is used for eliminating the eliminating the competition. And you know that the Competition Act 2002 is a Monday, there is an compulsory to maintain a sustainable or the good healthy competition in the market. Okay, so the periodic pricing violate the antitrust law. Okay, what is it? Violate the antitrust law. Okay, and it is make market more vulnerable to the monopoly. Okay, so it has ultimately is promoted to the monopoly market. So the Indian government don't want such kind of taxes in their market. That's why the predatory pricing is not permissible in the market. Okay. The next one, which segmentation approach is the most compatible with the spirit of market concept? So the first one, benefits out, second income source, and the second one, the income, so social class and the family. So the segmentation approach is most compatible to the spirit of market concept. Okay, so for the spirit of market concept, what we have for the spirit of market concept, the option number one, benefit south. Okay, so what is in the marketing concept? We use the marketing data, focus on the what in the needs and the wants of the customer. Okay, in order to develop the marketing strategy, and not only to satisfy the needs of the customer, but also accomplish the goal of the organization. Yes, okay. So that's why the spirit of the marketing concept is beneficially sorted. Okay, so the option number right, they are not, it is not a income, they are not maintaining the social class, this is not related to the family size, they're not making, they're just thinking about how to sort which is beneficial for the society, which is beneficial for the customer. These kind of things they have to be use that approach in the marketing concept. Okay, so the option number A is correct over here. Then the next question, which is in your screen, that is 81. Who coined the term marketing myopia? So the marketing myopia is a term by the Philip Kotler, Kent Davis, and the Levitt, Thyroid, Theodon Levitt on the William Stanton. Okay. So who coined the marketing myopia? This word, the marketing myopia, this word is coined by the Levitt. Okay, the Levitt, and this actually this the professor, the name of he was a professor in 1960. Okay, and he article the name sorry, article by the same name republished in 2004. Okay, so this myopia is published in 2004 because he coined the point, that is marketing myopia. Clear? Let's next question, which is in your screen, that is a 4P concept. 4P concept of marketing is coined by, you know that, by the neo-modern Philip Kotler, McCarthy, and Ogilvy. So who is coined the marketing for marketing concept? So the what is the 4 P's of the marketing? You know that people, no sorry, product, price, promotion. Product, price, promotion, and place. Okay, so these are the 4 P's, and which is coined by the McCarthy. Okay, MC McCarthy. And when he coined this, or when he expressed it first in the 1916, clear, it is in 1916, and in his books of basic marketing, a managerial approach. Okay, in his books, that is, the book's name is Basic Marketing. So the Basic Marketing books is published by or written by, who is the author of the Basic Marketing? A managerial approach. Okay, managerial approach is coined by, is written by the McCarthy. Clear? Let's the option number C. Okay, so next question 83. In the history of marketing, when did production period concept end? Okay, production period concept end. You know that there is an concept of uh, production concept. First concept is coined, that is the production concept. That means how much the maximum you produce, maximum you sell. Okay, then the product concept, then the selling concept, then the market concept, and then the holistic no market concept, and one more, I'm not recalling it right now. Mm. So we'll tell you later. I'm not doing it. The production concept, product concept, selling concept, marketing concept, and the socialty marketing is comes under. Yes, the social deal concept. Social tier concept. Okay. So it's a he was that they was thinking about the whole all over the society welfare. Okay. So they produce a product in the way they be beneficial not only to the customer, it's also to the society. So the what the option number one, later 800, earlier or 1900, and in 1920 decades, and none of the above. So you know that the production concept is comes to an end in the 1920 decades. Clear? In the 1920 decades. Clear? Yes. The next question, the 5th P of the marketing state by the Philip Kotler. Okay. So for the 5th P, that is given by the Philip Kotler, not by the McCarthy. Okay. So the Philip Kotler coined the what he coined the gospel of marketing. And in this marketing, the 4 P's of the product, price, promotion, and he added the 5th one. He added only the 5th one, because the 4 is added by the McCarthy and the 5th one is added by him. That is the purpose. Okay, that is the purpose. So here the option number B, the purpose, is right over here. Clear? Next question, the testing before launching a product is known as, testing before launching a product is known as assist test, concept testing, market testing, and the test marketing. Okay, so what will the right answer? What is the first? The testing before launching a product. Okay, we are tested our product before launching, so it is a kind of what? It is a kind of test marketing. What? It is a kind of test marketing. So what is a test marketing? It is a marketing method at this aim to explore the consumer response to product or marketing campaign by making it available on the limited basis before the wider release. Okay, so here what is happening, the basically the consumer exposed to the product. Okay, and the campaign may be or may not be aware that they are the part of the test group. Okay, so testing before the launching, this is the test marketing. Clear? So, so many times the consumer are aware with this testing of the product, and so many times they are not aware with that. Okay. The next question, which is in your screen, marketing unit was propounded by option number A, N.H. Borden, option number B, Philip Kotler, option number C, Stanton, and option number D, Anderson. So, what will the right answer? The market unit was propounded by. Who's propounded the market unit? So here the this is not NH. He is the nil. Okay. So Neil Burden, Burden was propounded the market tuning. So what is talking about the talking is what is the what is his perception about the market unit? He said that who serve a professor. So here he is actually is he was the professor of advertising in the Harvard Graduate School of the Business and Administration, and he was termed this market unit is nothing but a, he said the market unit is nothing but a marketing mix. Okay, is nothing but a marketing mix. So he used instead of using the marketing mix, he used the word that is a market unit. Okay, so having the same concept behind of the marketing unit. Okay, so next question, which is in your screen, that is when market is price sensitive. Okay, in the firms or adopted when the market is a price sensitive. So what the firm adopted, either they have adopt the option number one, cost leadership strategy, focus strategy, price leadership strategy, and the none of the above. Okay, so what is that? When the market is price sensitive, what he use a cost leadership strategy. Use a cost leadership strategy. So what is the cost when the market is a price sensitive? He use a cost leadership strategy because in the here the where the company is most competitive price product on the market, its meaning that is it is the cheapest. Okay, cheapest, they have to sell in the cheapest cost. And you can yeah, there is an example of a you can see there is a best example, that is a McDonald. Okay, okay, McDonald. Okay, and the Walmart. So you know that here is the market is using the price strategy, price are sensitive in the form. So what they do, we use a cost leadership strategy. Clear? Actually they match their price with their competitors. Okay, so the cost leadership strategy. Next question, that is the black box model in marketing is related to. Black box marketing is related to option number one, marketing planning, option number two, marketing mix, option number C, marketing control, and the D, consumer behavior. Okay, so you know what is the black box marketing? So black box marketing we use in the study of what? Buying behavior, buying behavior, or buying behavior of consumer. And this is a really a black box because here it is assumed that what take place in the consumer black box of the consumer mind can be inferred from the study and observe stimulus and the response. Okay, so it is a difficult, so we have to uh, do the study. The mind of the consumer is like a black box. So we have to, till we have not enter in the black box, we did not get the what they actually the response, and the consumer want what is in his mind. Okay, so this is the black box model in the marketing. It's having the which one of the option is true? That is option number D, consumer behavior. Okay. Next question, praise release is a part of. Praise release is part of first one, public relation, B, advertising, sales promotion, and none of the above. So the press release is the part of public relation. Yes, because public relation is refers to the variety of the activities conducted by the company to promote, protect the image of the company and its products and policy in the eyes of the public. Thus, its aim to manage the public opinion of the organization. So what will they do? Encompass the broader range of the activity. Clear? Next question, which of the following is not a direct marketing? Direct mail marketing, retail marketing, telemarketing, and the email marketing. So, which is not a direct marketing? You know that direct mailing, it's a direct marketing. Okay, it's not. Then the telemarketing, that is telephone marketing, is also direct marketing. Email marketing also direct marketing. But the retail marketing, it's not a direct marketing, because it's a passes from the manufacturer to the wholesaler, from the wholesaler to the retailer. Okay, so that's why when the product is that, or the marketing starts for direct manufacturer to the consumer, in that case this is the direct marketing. So you, this relation you can see in the direct mail marketing, in the tail marketing, and the email marketing. Okay, so the option number B is right for this question. The next one, the emphasis of a human resource management is development, punishment, promotion, and demotion. So the emphasis of the human resource is for, you know that it's for the development, overall development of the organization and the overall development of the employees. So here here the in the HRM is the practice of managing the people to achieve the better performance. Okay, so if they achieve the better performance when they develop their self. Okay, so it is what? Option number A is right. In 92, the mechanism to identify the employees' growth potential is done through job enrichment, job evaluation, job assessment center, and the position description. So, what will be the right answer? Job assessment center is the right answer here, because the mechanism to identify the employee's growth potential. So how do you analyze, how do you mechanize this in on the basis of when you use the assessment. Okay, so the assessment word is assessment. Okay, the job assessment is in the on the basis of job assessment, actually is a process where the candidates are examined to determine their suitability for this specific type of employment, especially in the in like a military commander. Okay, so this is a job assessment center. Next one, that is, which one of the following steps comes first in the selection process? First one, preliminary interview, medical examination, interview, and the induction. So you know that they do, they first of all for the selection they use a preliminary interview. Okay, so the process of the, I will discuss you the process of the interview. So they firstly they take a preliminary interview. Okay, and after that uh, receiving application, After that, screening, scaling of application, and after that, employment test, after that, interview, after that, reference checking, then after that, medical examination, and finally they final selection. After they select the candidate. So first they take a primary interview, after that they receive the application, okay, and after that they screening the application, and after that employment testing, interview, referral checking, and the medical examination. After that this he is selected. So the right, the first steps comes in selection process, that is preliminary interview, okay, and then he receive the application, then he's screening the application, then employment test is done, then they take an interview, then the referral checking, and after that medical examination and the final selection. Clear? The next question, that is, who has developed the system approach of industrial relation? System approach. Who developed the system approach in the relation system approach in the industrial relation? Option number 1, John Dunlop. Option number 2, Jeremy S. Beck. Yes. And option number C, Michael Juice. And the option number D, that is Adam Flippo. So what will be the right answer? Yes, this is John Dunlop. Okay. So the John Dunlop is also from the Harvard University, and he's developed this approach in the year of 1958. In which year? 1958. So according to this approach, what is it? This approach is individual are the part of an ongoing but independent social system. Clear? And here we evaluate the behavior, action, and the role of individual, okay, for the culture and the society. So it is a system approach is given by the John Dunlop, okay, in the 1958. Clear? So the option number A is correct. Next techniques of transactional analysis was developed by. So you know the transactional analysis was developed by the option number 1, Elton Mayo, option number B, Peter Drucker, Eric Barron, and the Adam Smith. So what will be the right answer? First of all, what is the technique of transactional analysis? Transactional analysis is a, yes, it is a analysis which is developed by the option number C, Eric Barne. Okay, Eric Barne. So here it is a form, actually it is the transaction technique. It is a form of a modern psychology that examine a person relationship and their interaction. Okay, so this is the technique of a transactional analysis. Here they show the psychological things of the modern, okay, so the modern psychological things, and they examine the people with their relationship and with their interaction, okay, interaction. Clear? So the option number C, that is Eric Berne. Okay, it's he developed the technique of transactional analysis. Next one, which of the following method is not a demand forecasting method of the human resource planning? Option number 1, managerial judgment. Option number B, that is the managerial grid. Option number C, work study techniques. Option number D, statistical techniques. So here you know that this is the managerial grid. So here is not a demand forecasting method of a human resources planning. This is not a part of a demand forecasting. So what is comes under the demand forecasting? You know that managerial judgment is comes. Okay, then the work study techniques, statistical techniques like the analysis like a trend analysis, ratio analysis, then the scatter plot, computerized forecast, work study technique, and the Delphi technique. What? Delphi techniques. Okay, so the Delphi technique is also the forecasting method of the human resource planning. We will discuss in the another lecture what is the Delphi technique. Okay, and the regression analysis, econometric model, nominal group technique, scenario forecasting, and workforce analysis, workload analysis, job analysis. So these all the things we have this in the human resource planning. Clear? The next one, the major provision for employees health and the safety are contained in major provisions for the health of the health and safety of the employee. So in the Industrial Dispute Act 1947, Factory Act 1948, Industrial Employment Standing Order Act 1946, Employee Compensation Act 1923. So you know that the employees health and the provision and the safety is this provision is comes under the this provision is given in the Factory Act 1948. Okay, and this Factory Act is amended later in the 1987. Okay, sorry, 1987. Clear? And is served to assist the formulating the national policy in India and which respect to the safety and health in the factory and the factory for the employees. Okay, so it's the problems related to safety, health, efficiency, well-being is a person at a workplace. So it is a solved, which is the provision is given for this all for is given in this Act Factory Act 1948. After that, sometime it was amended in the by the Factory Act 1987. Clear? Next question, which one of the following is not a major punishment? Is not a major punishment. So with the holding of uh, increment, option number B, demotion, option number C, transfer, and option number sorry, again I'm repeating, that's option number A, withholding increment. Okay, then the B, demotion, option number C, transfer, and the suspension. So it's not a major punishment. So what is a not a major punishment? You know that transferring is not a major punishment. No? You're transferring your employees due to if there isn't two things involved. If they're transferring is on the in the cases of promotion, okay, or in the cases of demotion. Okay, not that demotion you can say, but in the cases of promotion, they can transfer the employee from the one place to another. So it is not a punishment. Actually, it's not punishment. Okay, so the transfer, what is the punishment then? The withholding of increment, demotion, it's a punishment. Yes, suspension is a punishment. Okay, the method of the next question, the method of training in craft, trade, and technical area is known as option number one, that is A, is a vestibule training, B, coachingly, नहीं है, it's a coaching. So coaching training, then the C, mentoring, and D, that is apprenticeship. Okay, so what will be the right answer? Apprenticeship. Okay, so the right answer for this question, that is apprenticeship. Okay, so what is the meaning of the apprenticeship? training, it is a formalized method, okay, of the training curriculum program, and in which the combination of the classroom education with and the job under the supervision, okay, and it is also called as under study, is also called as under study. Okay, and in which the trainee is put under the suspension and guidance of an experienced expert. Clear? Now, what is the coaching? So, coaching is the method of the training place under the particular supervision. You are taking the coaching, okay, and whose function of the coaching is training the employee, and this helps to learn and pick up the skills is needed, okay, in the speed, and the superior provide a feedback to the trainee on his performance, how did the employees perform, and offer him the some suggestion for the improvement. Okay, so after that. Okay, next question, that is which one of the following training method is not a managerial on the job training method? In the job training method, coaching, action learning, job rotation, and the management games. So what will be the right answer? It's not. The method, it's not a managerial on the job training method. Coaching, action learning, job rotation is the job training method, but the management game is not a job training method. Clear? uh, is dash selection, recruitment is a succeed, recruitment is a proceed, process, recruitment is a simultaneous, and none of the above. So recruitment is what? Recruitment is a proceed, precedes, sorry, it's a precedes. Okay, so recruitment is a precedes selection. So recruitment precede the selection process, and the selection process is only completed when the job offer is created and given to the selected candidate by the appointment letter. Okay. The next question, which of the following is not a direct tax? Income tax, wealth tax, gift tax, and the production tax. You know that the which is not a direct tax, that is a production tax, is not a direct tax. So while government impose a direct tax on the income and the gain, and the indirect tax is imposed on the consumption of the goods and services, so the production is a the tax is levied, that is a GST. Clear? So the option number D is correct over here. Next question. If the both regression coefficient of the two series are negative, and the coefficient of correlation should be, if the both regression coefficient is negative, okay, so the coefficient relation, if the regression sign is having the negative sign, in that case the same size is followed by the coefficient of correlation. If the it is negative, it will be negative, the regression coefficient is negative, then the coefficient of correlation is also negative. If the regression coefficient is positive, then the coefficient of correlation is also positive. So the option number that is negative. Okay, so the option number B is correct over here. Yeah. Next question, the underlying underwriting commission is classified as, what is the underlying commission? Underlying commission, it is a capital expenditure, capital loss, a deferred revenue expenditure, or the capitalized expenditure. So what will be the right answer for this question? You have to comment in the comment box. So it is your homework. Okay, so yes, just comment me this question in the comment box, what is the underwriting commission, and which is classified in which factor, okay, which section. Next question, which of the following is not covered by the intellectual property right? Option number 1, patents and the design, trademarks and copyrights, labor industrial relation, and all of the above. So what will be the right answer? First of all, what is the intellectual property right? So IPR is refers to And intellectual properties refers to the creative work which can be treated as an asset or the physical property. Okay. And the intellectual property right is the falls principally into the four main areas. Okay. Which areas? In the areas like a copyright, okay, trademark, okay, design and patents, you can say design and patents, design rights and the patents. Okay, so these are the area where the intellectual property right is covered. Okay, so the patents and design is covered, it's not covered. The question is talking about the not cover. Okay, so the patent and design right cover, yes ma'am, is covered. Trade and copyright, yes ma'am, is covered. Labor and industrial relation, no. So option number C is right over here. Next, in the assessment of the income tax of any assessees, which of the following is relevant? Income Tax Act 1961, Income Tax Act 1962, Finance Act of the concerned assessment year, and all of the above. So the options is given. These are the options actually irrelevant. This question I have put from the MPPSC. Okay, MPPSC set. Okay, so this question is irrelevant because the options is not a match. Okay, so question is related. The assessment of the income tax of any assessee, which of the following is related? Income Tax Act 1962, it might be possible. Okay, now the Industrial Development and the Regulation Act was enacted in the year. In which year Industrial Development and Regulation Act was enacted? You know that is enacted in 1951. Okay. Next question. Technique of decision or decision. The techniques of a decision of making. Decision making of making. It's a decision making is review of his own expenses, brainstorm system, and the nominal grouping method, and all of the above. So what will be the right answer for this question? You know that the technique of decision making is how do you take a decision. That what are the techniques we have used when we are decision making? We review his own experience, okay, on our experience. Brainstorming system, we have to connect the things with the which we have already faced in the past, okay, and we will facing in the future. This is a brainstorming and the nominal grouping method. So the option number D is right in this question. Clear? Now, the long-term solvency is indicated by long-term solvency is indicated by asset liability ratio, debt equity ratio, interest coverage ratio, and all are the correct. So first of all, what is the long-term solvency? The long-term solvency, you know that the long-term solvency, that means where the debt and the equity relationship. Okay, so it is a long-term, yes. So how do we solve the, what will be the answer? That is debt and equity ratio. Okay, so the option number B is right over here. Now the next question, cash equivalent means. What is a cash equivalent? Is a cash and bank and highly liquidate investment. So yes, cash equivalent is what? Is a highly liquid investment. Okay, the items or the investment which are liquidate quickly. Okay, like cash at bank. Okay, cash at bank. So these kind of asset can be liquidate higher. They're having a high liquidate, and these are the high liquidate investment. So the option number D is right over here. Okay, option number D. Yes. Now the next question. This the definition of the statistics. Statistics is the science of estimating and the probabilities. Okay, so it is given by whom? Ballway, Boddington, and the Robert and the Fisher. Robert and the Fisher. So who will give the definition of statistics is a estimation and the probability. Yes, it is given by the Boddington. Okay, so the option number B, that is Boddington. Okay, so who the Ballway give the definition of the statistics, that statistics may be called the science of counting. Okay, it's a counting. Science of counting is given by the Ballway. Okay, it's a science of counting is given by the Ballway. He said the statistics may rightly be called the science of an average, or you can say it is science of an average. Clear? According to Boddington, the science is a science of estimating and probability. Okay. The next question, and one more another which I'm just recalling, that is one is given by the Crogston and Cordon. Okay, so they give the definition of the statistics, that statistics is a collection, tabulation, tabulation, okay, presentation, analysis, interpretation of numerical data, of numerical data. Clear? So the next question, which of the following is more relevant to the primary data? More reliable, quickly to obtain, available to individual and the small organization. All are the correct. So which one of the following is more relevant for the primary data? More relevant. Okay, it's talking about the more relevant. So primary data is, yes, it is the more reliable. Okay, it's more reliable. It's not the quickly or quicker to obtain. No, it's they take a too much time to obtain. Okay, available to the individual and small organization. No, it's not available. It's getting the information from the individual and getting the information from the organization. It's a difficult task. Okay, so it is the most appropriate. That is, it is a more reliable. Okay, whenever we see the all of the above, we take the all of the above. Okay, so here is not. Which of the following are the feature of the equity share capital? Dividend payable only if the company has a earned profit. Dividend become payable only if such company has been recommended by the board of directors and passed by the annual general meeting. C, the both the dividend is payable only if the company has earned the profit, and dividend become payable only if the such payment has been recommended by the board of director by passing the annual general meeting of the company. Okay, so what will be the right answer? Here is the right answer is option number C. Here the equity share. Okay, the question is a feature of the equity share capital is the dividend is payable only if the company has earned the profit, and dividend become payable if only such payment is recommended by the board of director by passing AGM of meeting of company. Okay, so option number C is correct over here. Now, which of the following is more relevant to the primary data? We have already discussed it. It's more quicker. Next question. Next question, that is which of Next question. Okay, the TRIPS. What about the TRIPS? Okay, so the TRIPS is a trade related intellectual property right. Okay, and the TRIPS is a trade related investment measurement are associated with. So here option is given: Preston proposal, Duckale proposal, Chelthian committee, and the Rangarajan committee. So the trips and the trims are associated with Dunkel proposal is by the proposal. Dunkel proposal took an active part in the Uruguay round negotiation of the GET. His contribution to the successful completion of this negotiation was vital, and when the negotiation had passed the deadline and no agreement had emerged, he took initiative in his own hand of compliance. Okay, so it is the Dunkel draft. Okay, the word is Dunkel draft is did in December 1991. Clear? So what is Dunkel draft? Dunkel draft was accepted and become the foundation of the, it is the foundation of the WTO. Clear? Now the next question, a group of item in the ABC system of inventory control are small number of item with a large rupees investment, large number of item with a large rupees investment, large number of item with a small money investment, and the very high quality item. So what will be the right answer? A group. A group, sorry, it's a A group. Okay, it's a A group item from the ABC. Okay, so what is the ABC? You know that it is a inventory control mechanism. Okay, so what is in A? A is a small number of item with a large rupee investment. That means you're categorizing in that you have a small number of item, but the rupees you have invested is a large. Okay, so the option number A is right over here. Clear? So let's discuss the AB model, that is the inventory model. It is categorized A are good. Okay, A for it is a good that register the highest value in terms of annual consumption. Okay, and it is in the interest to the note that top 70 to 80%. Okay, this is 70 to 80%. Okay, so that's why it is difficult to prioritize their item. Okay, that's why they are in a small number. Clear? Now the next, tax management is done before tax planning, after tax planning, yes, and the middle of the tax planning, and never. Yes, tax management is before tax planning. We manage our tax before the tax management. So what is the tax management? Is the tax management deal with the filing of the return in time, getting the account, auditing, deducting the tax at source. This is a and creating the tab for making a planning of the tax planning and related to the future. Clear? Now the next question, which of the followings are the stakeholders of the company? Employee, supplier, customer, these all these stakeholder of the company. You know that this is a really simple question. Yes, which of the following is not sales promotion tool? Option number A, news article, premium, coupon, contest. So it's not sell promotion. So sell promotion tools means it's kind of advertisement. Okay, but how do you promote your sale? Not, it's not advertisement. Advertisement is a different thing and sales promotion different thing. You just want to increase your sale or you want to promote it. So what do? You give the premium to them, you give the coupon to them, and make a contest. Who win the contest, he will get this kind of ticket. He will go here and there. So this kind. Okay, so what is it? It is a new, it is, it's not that is a new, what will the answer? That is a new article. It's not a sales promotion. Clear? And for increasing sale, the any product producer adopt the different measures like distributing the sampling, gifts, coupon, bonus. Okay, so these techniques are called as a sales promotion. Clear? Next question, if the rank of the two attributes in the samples is as follow the rank of correlation coefficient is between. So here you can notice that there is a rank 1, 1, 2, 3, 4, 5, and rank 2 is a 5, 4, 3, 2. So here is an ascending order, here is a descending order. So what is happening over here is when we calculate when we calculate it, its answer is always B. Its answer always be, hence the always be minus negative. Just say this is a trick. You can uh, solve this kind of question if they ask in the question paper. So you just don't use your extra brain. So just where you, if you see the rank correlation, they are ascending. One side is the rank 1 is ascending order, and the same way the rank 2 is in arranged in the descending order. That's in the same number. So whenever we calculate it, so answer will be -1. Okay, so the option is -1. Okay, clear. The globalization enhance the international flow of what? Labor, capital, technology, or all of the correct. So the globalization is enhanced, is a process of rapid integration or of the country. Okay, and the characteristic of the globalization is to globalize their goods and services, capital, people, data, area. So that's why labor, capital, technology, or all of the above is correct for the globalization enhance the international flow of labor, capital, and the technology. Next question, under the Murray rules, in the event of the dissolution of the partnership, yes, the solvent partner will have to share the deficiency of insolvent partner in what? In what? In what? The profit sharing ratio, adjusted capital ratio, or sacrificing ratio. So if you are not familiar with the Garnier and Murray, okay, so these are the three partners. Okay, so here the, I'm not remembering his name of the Garnier, Murray, and what is it, the name of the insolvent partner. So I will explain you later. I will tell you about it if I could recall it. So in the event of the insolvency of partner of any losses should be shared in the ratio of last agreed day of their capital ratio before dissolution take place. Okay, so in this there is no mention the dissolution of the partnership, the solvent partner should have will have to share the deficiency of the insolvent partner in their adjusted capital ratio. Okay, next question, which of the following accounting principle differentiate between the owner and management? Option number 1, business entity. Option number 2, going concern. Option number 3, dual aspect. And option number 4, none of the above. So what will be the right answer? Which of the following accounting principle differentiate between the owner and management? So it is when the owner and the manager are the two different entities. Okay, so that is the business entity. Clear? Next question. For a normal distribution, what is the formula of the mean, median, mode? So they having for the normal distribution, you know that in the normal distribution there is a the mean is here. So here is a mean is equals to mode. Sorry, mean is equals to mode and mode is equals to median. Okay, so mean is equals to median equals to the mode. So this is a normal distribution, or so option number D is correct over here. The normal distribution is a symmetric and the bell-shaped distribution in which mean and median are all equal. Clear? Next question, which are the following as per the Hirschberg motivation hygiene theory is a motivational factor? So is having the motivation Hirschberg motivation hygiene theory. Job security is a hygiene. It is a motivation factor. No. Company policy, no. Work itself or the interpersonal relationship. So the motivation factor is work itself. Okay. So work itself, the Hirschberg two-factor theories outline the humans are the motivated by the two things. Okay. Two things as per two things, and that is two things. These two things are form the motivation and hygiene factor. Motivation and the hygiene factor. Okay, and for motivation there is an where they will get a job satisfaction. Okay, and in the hygiene factor they get uh there is an distribute is a job satisfaction and the job dissatisfaction. Okay, this is we can elaborate this job dissatisfaction. So what has happened in the hygienic, they pay the status, okay, security, then the working condition, frank benefit policies, admin practices, interpersonal relationship. So these are okay. What is the comes under the, this is not comes under the motivation factor, the meaningful work, challenges. Okay, this will create a motivation, recognition of the accomplishment, feeling of the achievement, increasing the responsibility, opportunity of growth, and the job staff. Okay, the next question, current ratio is the balance sheet ratio, profit and loss account ratio, combination ratio, or income ratio. You know that current ratio is equals to current asset divided by current liability. So where we will get current asset and current liability in the balance sheet. Okay, so the A option is correct. Which of the following following is correct? Fair wages is higher than the living wages. B, living wages is higher than the fair wages. Fair wages, living wages, minimum wages are the same, and none of the above. Okay. So what will the right answer about what is the correct? The fair option number A, that is fair wages is higher than the living wages. Okay. So what is it? The here you know that what is the concept of the fair wages? Fair wages is linked with the capacity of the industry to pay. Okay, that is the what the industry to pay, that is the fair wages. Okay, and this with the what is the living wages, wages it should unable to earn and to provide it for the himself and his family. Okay, not only the essential food, clothes, and the shelter. Okay, but measure the comfort, including their education. Okay, education of the child, protection against the ill health, requirement of the essential social needs, of measure of the insurance against the more important and misfortunate, including the old age. So these are the fair wages, that means which is they have to, to fulfill their basic needs, and for the living wages they matlab more, that means more than the basic needs. Okay, so this is the fair wages always higher than the living wages. Okay, next, the phase payment by result is more close to payment by result is more close to time rate wages, incentive, productivity leakage wages, or the all of the correct. Okay, so the payment by result, okay, when we get a result then we pay, so it is a time rate wages. Okay, is time rate wages, incentive, no, not exactly incentive, productivity linkage wages. It's also, so the option number A is not correct over here. There is an ambiguity in the answer, that is a incentive. No, incentive is also available. Incentive, yes, the option number D. Yes, the option number D is correct over here. The payment by the result is more close to time rate. See, it's more close to. If it says to more close to, then the it's related to the to their I think their time rate wages. Okay, so the option number A is correct. Next question. Machine is an example of consumer goods, capital goods, intermediate goods, or the none of the above. So what is the right answer? The machine is an example of what? It is a consumer goods, not possible. It is intermediary goods, not possible. So it is a capital goods. So the option number B is correct, because the capital goods is it's used in the business, and it is a physical asset, and they play a role in the production. Okay, and sometimes it's called as a property. It's called as a plant and equipment. Okay, and the capital goods also is included in the fixed asset. Okay, that's why it is a machinery is included in the capital goods. Okay, the in the fixed asset, that why is it is a capital goods. Clear? Now the next question, which what will be the assessment year of the financial year 2017-18? So what will be the assessment year for the 17-18? The assessment year is 17-18, 16-17, or the 18-19. So at assessment year means the in which year you the assessee pay the tax. Okay, the tax is payable in which year, it is a assessment year, and on the amount in which the tax is calculated. Okay, it's calculated. Okay, it is a previous year. So the option number, so for the financial year, that is the 17-18 is previous year. Yes, it is a previous year, 2017, 17-18. So what will be the assessment year? That is 18, 2018-19. Okay, so the option number C is correct. Next question. Which of the following measures is not adopted by the RBI for the controlling credit in India? Cash deposit, cash adequacy, cash CRR, cash reserve ratio, and the statutory liquidity ratio. So you know that there is no concept of the cash deposit ratio. Okay, so the option number A is correct over here. So you know that what is a CRR? CRR is the amount or the total deposit is have to maintain or maintain by the bank, or give the bank on the percentage of, okay, in the certain percentage in the RBI. Okay, so this is a CRR. What is the SLR? SLR, that is the statutory liquidity ratio. It is a minimum percentage of the deposit. Okay, deposit that is that a commercial bank has to maintain in the form of liquid, or in the form of cash, or in the form of gold, or in the form of other security. So this is a liquidity ratio. The how much percentage they have to deposit, have to say they have to deposit in the form of cash or gold in his bank. So this is a SLR, statutory liquidity ratio. Clear? Then capital adequacy ratio is what? Capital adequacy ratio means measurement of a bank's available capital expressed as a percentage of a bank risk weighted credit exposure. Okay. So it is the available expenditure. Okay, is the capital adequacy. That means he having the capital adequacy in his bank. So this is a ratio they have to maintain in the bank to avoid the risk wastage, risk weighted credit exposure. Okay. The next question, that is one, the retrenchment. Retrenchment is a denial of the employment for the short term, denial of the employment for the long term, denial of the employment forever. So what is it? Do you know that retrenchment is denial from the for denial of the employment forever. So retrenchment is word is to cancel or to terminate the employee due to the surplus of the labor or the incapacity of the employee to match the performance of their standard of the company. Okay, that is the retrenchment. Okay. Then next, the lender of the last resort is lender of the last resort is who? Who is called as lender of the last resort? Resort RBI and NABARD SBI or the local money lender. So who is the lender of the last resort is RBI is the lender of the last resort because the RBI is a banker to bank. Okay, and bank also act as a lender of the last resort. Okay. Next question, that is a 183, which of the following organization is associated with the Microfinance Regulation Authority? Okay, so SIDBI, NABARD, RBI and IDBI. So this question is also I am taking from the MPPSC. Okay. So here what the which of the following organization is associated with the Microfinance Regulation Authority? SIDBI, NABARD, RBI or IDBI for the microfinance. There is a possibility of the SIDBI. Okay, but there is no ambiguity in this question. Next question. Yes, SIDBI. There is an ambiguity in this question because the option is not correctly matched. Okay. The next question, the 184 schedule bank are nationalized. Option number B, included in the fourth schedule of RBI, included in the second schedule of the RPI, and none of the above. So what will be the right answer? The schedule bank in India refer to those bank which has been included in the second schedule. Okay. Second schedule, the schedule bank are is included in the second schedule of the RBI. Okay. And you know that RBI Act is 1934. Is 1934. RBI Act is 1934. Okay. The next one, RBI was established in. Okay. RBI is established in, yes, 1935 in the 1st of April. In 1935, you know that RBI Act is 1934. Okay, but RBI is established in 90 because why it is the Act is 94, because the bill is passed in the Parliament in the year of 1934 and but is enacted in the comes into force in the 1935, in which in 1st of April. Okay, clear? Next question. The Competition Act was enforced in the year. 2000, 2001, 2003. You know that the right answer, none of the above. So you know that there is a option is none of the above because Competition Act in 2002. Okay, so though no option is given in this question. Yes, and the Competition Act is replaced to whom? MRTP Act. Okay, MRTP Act 1969. Okay, MRTP Act 1969. The Competition Act replaced to MRTP Act. What is the full form of MRTP? The Monopoly and the Restrictive Trade Practices. The Monopoly and Restrictive Trade Practices. Clear? Which one is not related to the legal environment of the business in India? Which one of the following is not related to the legal environment of the business in India? MRTP, FERA, Factory Act 1948 or the RBI? So what will the right answer for the legal environment? RBI. RBI is right answer because the MRTP is also in the legal boundaries of the environment, and the FERA is also, and Factory Act is also having the legal environment of the business. Okay. Next, which one of the following replaced MRTP? Just I have just discussed it. That is Competition Act 2002. Okay, the Competition Act 2002 and the MRTP Act 1969. Clear? And the FEMA is replaced by the FERA. Okay. Next question. A sound economic policy of any government ordinarily entitles in it. Okay, a sound economy. Okay, it's for the sound economic, the welfare of people, growth of the GDP and the national income, etc., fair distribution of the wealth. Okay, and all of these. Okay, so all of these. So what will the answer? This for the sound economic policy, any government ordinate will have, they having a welfare, they think about the welfare of the people, they focus on the growth of the GDP and national income, the fair distribution of the wealth, so the all of the above. Okay, this is the sound economic policy. The next question, the dividend payout ratio can be determined by the dividing the dividend per share by dividing the dividend per share by earning per share, number of equity share, market value per share, or book value per share. So what will be the right answer? Yes, the dividend payout ratio can be determined by dividing dividend per equity dividend per share to earning per share, EPS. Okay, so EPS is divided with the dividend per share. Okay, so the option number 1 is correct. 1 is correct. A is correct. Okay, the next question, which of the following is not a ratio for the analysis of the profitability? So operating net profit, acid test ratio, and none of the above. So you know that for the profitability, we have to calculate the operating ratio. Yes, and we have to calculate the operate ratio. Yes, and the net profit ratio. One, what is the asset ratio is we have we not get a this is not a profit analysis of the profitability, because asset ratio we calculate with the current asset, liquid asset minus the current liability. Okay, so asset ratio is show the liquidity of the company, liquidity position of the company, position of company. Clear? The next question, which of the following the statement of changes in the financial position show? The statement of changes in the financial position show. A, Source and uses of fund. B, assets and liability. C, income and expenses, and none of the above. The statement of changes in financial position. The statement of changes in financial position. Changes in financial position. How do you get this? All of the above. All of the above. Okay. So all of the above. So here is a none of the above, none of this. No, this is all of the above. This is a source and use of fund, or the asset, financial statement, financial position. Na? So no. Just give me a second. The financial position is by the assets and balance sheet. Okay, there is an income and expenditure fund flow statement. So mostly is reliable, that is a asset and liability, that is a balance sheet. Ultimately we can say the balance sheet. So the financial position. After that, after the reuse of forfeiture share, the balance of share forfeiture account will be transferred to. Okay, so here is the after the reissue of or forfeiture of the share, the balance of the share forfeiture account, we will transfer it in the capital reserve account. Okay, so after the how do we make a entry? The share capital account to forfeited forfeited share, and to capital reserve. Whatever the amount we have remained, that is we go to capital reserve account. Okay, the capital reserve account. Which one of the following is not a method of the valuation of the share? Asset valuation method, yield valuation method, super profit method. So what will the right answer? You know that the super profit method is calculation of the goodwill. It's used in the when we calculate a goodwill. Okay, so the for the valuation of the share, we calculate the asset valuation method, yield valuation method. Clear? Now the given paradox as and the exception to the law of demand, including prestigious goods, inferior goods, complementary goods, or the substitute goods. So you know that the given goods concept is who introduced the given paradox. Okay, is given by the Sir Robert Giffen. Okay, Sir Robert Giffen, and the these goods are the goods that which are having the inferior in comparison to the luxurious goods. These are the Giffen paradox of the exception to the law of diminishing marginal utility. That is, the inferior goods is the Giffen goods. Clear? The next question. So what is a given goods? I have to explain it rightly. That is, a given goods is when the price of some of the goods is increases, so the demand is also going to be increases. So this is called as a given paradox, because what we see in the law of demand, that is, if the price of goods is increases, quantity of the that good is going to be decreases. If prices decreases, quantity is increases. So this is a inverse relationship of what. So what is in the given paradox is happen, that is a quantity. If the price is increases, okay, the quantity is also increases. So it is the opposite to the law of demand. Okay, it's an exception to the law of demand. Clear? Now the next question. The demand curve, when the demand is perfectly elastic. Okay, when the demand is perfectly elastic, so then perfectly elastic, that means the price is fixed but the quantity changes according to their demand. So the it is perfectly elastic. Okay, so infinity. Okay, so perfectly elastic, the demand curve is perfectly elastic when it is a horizontal. Clear? Horizontal straight line. The perfectly elastic when it is say perfectly inelastic. In case of elastic, it is perfectly horizontal. Okay, and when he said perfectly inelastic, in that case the drawing is like that, and this is equals to 0, and in that case the diagram is vertical. Okay, vertical. So he is talking about the perfectly elastic. That's why this is option number C is correct over here, horizontal. Clear? Next question, law of diminishing marginal utility was propounded by. You know that law of diminishing marginal utility is propounded by the Paul Samuelson and Giffen, Marshall, Hicks, and the Robinson. Yes, law of diminishing marginality, marginal Marshall. Okay, so marginal Marshall B is right answer. Next question, the regression analysis is a measure of degree and the direction of relationship, the degree of association, cause and effect relationship. So you know that the degree of relationship is shown in the coefficient, co correlation, correlation. Okay, degree of association is also be shown in the correlation, but the cause and effect, there is no cause and effect relationship between the correlation, but there is a cause and effect relationship in the regression. Okay, regression. So that's why the option number C is correct. Now the next question, that is the principle that an employee should be made accountable to only one superior and officer related to. One superior officer is a unity of command. Okay, it's a unity of command. The unity of command is a classical principle of management theory in which each employee only responds to one superior. So the option number C is correct. Clear? The next question, last one, that is the planning is an activity which is always confined to top management, pervasive to all level, and carried on only by the promoter and the appointed advisor, the performed jointly by the management and the worker representative. So what will the right answer? That is pervasive to all level. Okay, planning is an activity which is always pervasive to all level. So what is the planning in pervasive? The plan is required to all level of management as well as in all department. Okay, so the planning which is required in all department and in all level of in the all level of management. Okay, and it's not an exclusive function of the top management or nor by the any particular department. So every department play a very important role in the uh, pervasive pervasive. Okay, in the pervasive planning. Clear? So the option number B is correct answer for this question. So we have completed over here the 200 questions. Okay. So do your practice very well. This the basic question which I have taken. So this is also important because it is help to build your basic concept and which will help you in for your the advanced level of preparation. Okay. So take care and do prepare well.